the full faith and credit of the United States.
I can confirm right now there's no problem with treasuries. Based on the price action of this morning, the 10-year just about unchanged, around 450. Let's turn to the economy. Investors looking ahead to this week's inflation and retail sales data. Nita Richardson of ADP Research noting the positivity in the US jobs market, but saying, quote, the strength of these headline numbers masks sector-level weakness. Nita joins us now for more. Nita, it's good to see you. Let's go back to Friday's data. And before we get to Friday, 8:30 a.m. and the payrolls report, I want to talk about you, Mitch, that came out a little bit later. How concerned should the Federal Reserve be about that hotter than expected inflation read in that survey?
In a word, very. I mean, to see a percentage point increase in expectations for the year ahead inflation outlook is concerning. It shows how quickly consumers can change their views of inflation. And remember, expectations are a key input that we don't talk about on inflation and triggering it higher. So I would be very concerned about keeping inflation expectations anchored not at the 4.3%, which is what the Michigan survey said, but at the 2% target. That's where around where consumers anchored their inflation before the pandemic for 2 years leading into the pandemic. Now to see it rise higher after their well-deserved battle to reduce inflation, to see it edge higher is a concern.
At the same time, I got a number of notes just saying ignore. Please disregard. This is a completely political instrument at this point that basically just measures how much Democrats are displeased with the Trump presidency, and Republicans seem to be just fine. Other people pointed out that there was a slight deterioration among Republicans who were polled in the University of Michigan Sentiment Survey. Do you think it is valid to discount the University of Michigan because of the small sample size and the political leanings that it tends to represent?
What I think is valid is to look at another source, and we're going to get expectations data from the New York Fed that could corroborate this existing. So I don't throw away any data points at this point. I think they're all well worth considering, but not in isolation. So if you have the New York Fed corroborating the UMich survey, then there's some teeth to what we're seeing in that survey.
Going back to the labor market, you said that even though there is a lot of strength, especially with the revisions that we saw that were lower than people expected in terms of removing jobs from last year's tally, do you see something happening specifically in real time that's making you more concerned about the health of the labor market?
Absolutely, and I've said this before. It's a lopsided hiring market right now. You know, there's a lot of strength, so let's step back a little bit to the 3-month averages, both for the ADP numbers and for the BLS numbers. You're seeing private sector hiring over the last 3 months average around 200,000. That is a strong labor market, but it's all basically focused on consumer-facing industries, whether you're looking at leisure and hospitality, so short-term restaurants, hotels, vacations, or longer-term healthcare needs and healthcare industry seeing those gains. What you're not seeing gains in is in manufacturing, in the goods sector, in construction. That's a concern, especially if you're looking at possibly more tariffs in the future. So where are we going to get the hiring in the goods sector? That's what we're watching.
A cause for concern for the Trump administration. We spoke to Kevin Hassett on Friday. He said the benchmark from last year, it was the biggest downward revision since 2009. Was the Biden jobs growth not as good? Is Trump inheriting a worse labor market than many were predicting?
Yes, so January is a special month because all of these numbers get re-benchmarked to something called the quarterly census of employment and wages. And not to bore your listeners with the details of that, but it causes revisions. And this time, as you know, Anne-Marie, it did revise down that benchmark hiring rate from last year, but not as much as the BLS had told us that it would. It is a softer labor market than the first print, but overall it's still very solid, especially in the fourth quarter. So my contention is still that the labor market is solid. You saw the unemployment rate edge down last month. However, there is pockets of weakness that could, overwhelm the pockets of strength if the consumer proves to be less resilient than it was last year.
When it comes to BLS, everyone is concerned that these numbers are just not accurate. How do you make up for that? What else do you look at? I know obviously you look at ADP, but how else do you get a better picture of where we are right now in the economy?
First of all, I think jobs are important, jobs creation are important. Where the jobs are coming from is so important as well. So one data point, 1 month is not going to tell you the whole story. You have to look at the trend, and you can look at the trend in the BLS or the ADP numbers in the private sector as that the goods sector is weak. That is a consistent trend. You don't have to be a true believer of government data to understand that trend. Also, I look at wages, and you saw an increase in average hourly earnings in January. We still see that stickiness in wages in the ADP number, looking at real paychecks, administrative data. That is a concern for inflation, because if wages are sticky, maybe that's good for the consumer, but only if inflation continues to go down. And wages are one of the firm's highest input prices. So if you're looking at tariffs and higher labor costs, that puts especially small firms kind of behind the wheel going into this labor market.
Double dose of Chairman Powell this week in front of the Senate tomorrow and then the House on Wednesday. If there's some senators listening this morning, some congressmen, I imagine there are, what would your advice be? What should they ask later this week?
Chairman Powell? I think they should ask how Powell is thinking about the labor market in terms of verticals, not just overall, not just the solid hiring that he's seeing, but also how different parts of the economy are working. How is manufacturing producers versus small firms and large firms? We need to get into the nitty-gritty, because that's where policy action is going to take place. The headline looks good. It's underneath the surface where all the questions are.
I'm reluctant to build this up too much. As is often the case, we build it up, big grilling on Capitol Hill, what happens? Nothing burger on Capitol Hill across 2 days. By the time we get to day 2, I'm exhausted and don't want to watch the thing anymore.
Have you watched it ever?
The full thing?
Yes.
House and Senate?
Correct.
Yes.
You have?
Yes.
Wow, I'm impressed. There is one question that I actually am very curious about. How much they're modeling immigration into some of their inflation forecasts. How much of a variable some of their parameters are depending on how much immigration is limited or with deportations, because to me, a lot of people talk about that as being the bigger potential economic impact than even tariffs.
Neela, it's good to see you, as always. Big week ahead. 2 doses of Chairman Powell, Tuesday and Wednesday. Economic data Wednesday morning, CPI first, and then later on in the week, PPI and retail sales. So look out for all of that. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Well, on his way to the Super Bowl yesterday, President Donald Trump declared Sunday, February 9th, as the first ever Gulf of America Day. The proclamation was published to the White House website yesterday afternoon. Elsewhere, marriages in China plunged to a record low last year. Data from China's Ministry of Civil Affairs showed marriage registrations of 6.1 million last year. That compares to post-pandemic increase of nearly 7.7 million in 2023. The decline is a setback in the government's efforts to address a sharp drop in the birth rate. Starbucks is giving away free coffee today. The company said with the big game on Sunday, many Americans will spend the day going big, which may lead to a long Monday. That's why your post-game coffee is on us being Starbucks, not Bloomberg. Starbucks Reward members in the U.S. can stop in for a free tall, hot, or ice brewed coffee anytime today. And that's your brief, John.
Danny, thank you. Appreciate it. More from Danny in about 30 minutes. Up next on the program, big expectations for banking.
I think there's 2 things we need to watch here: financials and credit. It's so consistent for the last 18 months. Financials have been your leadership. Credit conditions have been remarkably benign.
Banks have been absolutely flying to start the year. We'll get the thoughts of Erica Najarian of UBS. Up next on the program, live from New York. You're watching Bloomberg TV.
case you missed it from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equity futures on the S&P 500 positive here by 0.4%. The bond market just about unchanged. The 10-year, let's call this one 450. Under surveillance this morning, big expectations for banking.
I think we're okay at the moment. Financials still lead, credit's still okay, but I do want to be vigilant here on the growth side, particularly with bonds. I think there's two things we need to watch here: financials and credit. It's so consistent for the last 18 months. Financials have been your leadership. Credit conditions have been remarkably benign. So if something is changing, I think that's ground zero. That's where we got to spend our attention.
So here's the latest this morning. Financials leading S&P 500 sectors year to date, with investors anticipating looser regulation out of Washington. Erica Najarian of UBS writing, as expected, the macro and policy cross-currents from the current administration have emerged, though the deregulatory momentum in Washington has been even stronger than expected. Erica joins us now for more. Erica, I know you're down in Florida for the beginning of the UBS Financial Services Conference, so share a little bit about that with us, what you'd be focused on through the week after this big run-up we've seen in banks in America.
Sure. So great anticipation meets slow January. I think what a lot of investors really want to hear about is from the institutional side, whether it's lending growth or investment banking activity, all the numbers are telling you that January activity has been the slowest it's been in a decade. So if we have this exuberance heading into the year, are we just delayed because of all of these policy cross currents and all the corporates are trying to figure out what to do and what's next from President Trump? Or is this something, is this really saying something more about maybe activity levels won't be so hot in 2025? Alternately, the consumer had a really, really strong fourth quarter. And so we're excited to hear from the likes of American Express and Capital One and Synchrony whether or not that momentum has lasted so far this year, because keep in mind that travel really drove that upside.
Erica, can the financial sector do well even if you don't get necessarily this incredible activity boom in deals that a lot of people were thinking about?
No. So look, we're sort of at the neutral rate zone in terms of interest rates, right? So if you think about it, we're not going to see these big rates of changes in interest rates. If we are, the stocks won't do well. Because if the Fed is cutting significantly, that means something's wrong with the economy. If somehow the 10-year backs up and yields go up for, because of inflation, then everybody's going to be worried about what that means for bond losses and for the economy. So given this sort of steady state that we have in interest rates and how that's not going to be, a driver or a catalyst for change in net interest income, you really need those activity levels in both loan growth and fees in order for the stocks to continue to work. That being said, the deregulatory momentum may be enough to support the stocks from a tailwind perspective until we wait for that activity level to rejuvenate itself.
Erica, you talk about how deregulation has been even more aggressive than we previously thought. And over the weekend, it was clear that the Consumer Financial Protection Bureau had closed its supervisory efforts, or at least put them on pause, and closed its headquarters. Is that a positive sort of tailwind for the financial sector, or is that sort of neutral because of just a mercurial kind of backdrop?
So I think it's going to be a positive. Keep in mind that we still have that overhang in terms of the potential for late fees being capped. And as you can imagine, if late fees are capped to $8 versus, let's say, $30, $35 now, then the card issuers are going to find ways in terms of mitigating that, whether or not it's less perks for the consumer or higher APRs or higher interest rates. So I think net, what happened over the weekend with the CFPB should be taken as a net positive for the banks.
Erica, when it comes to the start of M&A and this January being one of the weakest in a decade, you're talking about cross currents of policy, this uncertainty out of Washington, D.C. Well, that uncertainty might last for the next 4 years. What do you expect for the pickup then to be for M&A activity?
Sure. So, are we at a steady state in terms of volatility? Are we, especially on the tariff issue? I don't know. I think that's actually why we're so curious to hear from over 90 companies at our conference, because we want to hear what their clients are telling them. What do they need to see from a policy perspective, to start actually to get together. So actually this conference is coming at the right time because it'll be interesting to see what corporates have to say.
Erica, good luck with the conference. Looking forward to seeing some headlines from it. Erica Najarian there of UBS, ahead of the UBS Financial Services Conference, kicking off a little bit later on this morning in Florida. The financials so far, year to date, the banks on the S&P 500 up by around 12%. We're up 15% on JP Morgan, up a little bit more on Citi. I think you've both said it repeatedly. Sentiment's holding up, and we're sitting here waiting and waiting for activity to follow in the months to come. How long is it going to take?
A lot of people expect just until we get some certainty, and then those deals will come because they're all ready. At the same time, if they don't come, and Erica just was talking about this, you can't really see the follow through in the actual results because rates aren't at a level that could really justify current valuations.
How do you expect certainty from an administration that wants to use uncertainty? It's a feature, not a bug, because it wants to keep allies and adversaries on their toes when it comes to things like trade and tariffs. Trump has an idea of where he wants to go with each individual country, but he's not sharing that with everyone.
You can be fairly certain of a couple of things. Deregulation. I think we can all sit here and agree the regulatory burden isn't going to get bigger under the Trump administration when it comes to the financials. I think we can all sit here and say that M&A domestically should be easier, not harder. I don't think that story goes away. Part of all of that, just a whole bunch of reasons as to why people are buying these banks right now.
There is no reason right now to believe that these deals will not go through. If the uncertainty persists, people might have to rethink that. But right now, if you close the doors of the Consumer Financial Protection Bureau, it's basically even more deregulation than people previously expected.
I think a lot of people would say, and no offense to the senator from Massachusetts, less Warren is a good thing for the price of financial stocks, right?
I think that's pretty much a consensus.
Then we can all agree on that. Equity futures right now in the S&P, positive by 0.5%. Up next, we'll catch up with Victoria Fernandez of Crossmark, Isa Boltansky of BTIG, Francisco Blanche of Bank of America.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Overall, the economy seems to be on good footing.
The tailwinds to growth continues to be very strong.
We know right now is that the labor market's okay, and the Fed doesn't need to do anything for as far as the eye can see.
We're still doing okay, but there's still, I think, some concern as we head into 2025. Do we stay where we are right now, or is there further softening to go?
If we have policy uncertainty, particularly on trade, that's negative for growth.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. Equities doing okay, up by 0.5% on the S&P 500. Check out the Nasdaq, positive once again by 0.7. Meta is on a 15-day winning streak, 1-5, potentially looking at 16. That is a record run for that stock. Just phenomenal for some of these tech names still.
What it highlights is how much bifurcation there has become in the tech sector, where you have the winners like Meta who are able to signal and say the right things about AI, and the losers like Google that are not able to explain away their capital expenditure plan next year.
A lot of the big earnings are behind us. This week is going to be about the data and Chairman Powell. So take a sneak peek of the calendar. Chairman Powell, 2 doses this week on Capitol Hill. In front of the Senate on Tuesday, in front of the House on Wednesday. And then the data starts Wednesday morning. CPI, 8:30 Eastern time. Then as we work our way through the week, PPI, jobless claims. And then on Friday, retail sales. Are we going to find out that these higher prices are hurting consumers? What is this fear all about?
That, to me, is going to be one of the biggest questions after the University of Michigan Consumer Sentiment Survey. It alone doesn't really turn the tables, but what you do see is a higher bar for CPI to clear and then retail sales. McDonald's earnings just dropped, and what you heard was that U.S. sales were the weak spot. They actually beat, but it was global. U.S. sales weak, at the same time that they're trying to make it seem cheap with the $5 promotion. So, you know, again, do you see a different story from different consumer brackets, income brackets? We're going to be parsing through it all.
That's not going to pre-market up by 0.6%. The focus on tariffs through the week, 25% tariffs on steel and aluminum, and the promise of more to come. Reciprocal tariffs, something you hear repeatedly from members of this administration, and we could see the policy later this week.
Absolutely. It's a huge week when it comes to trade for this administration. Trump saying he's going to put 25% on aluminum and steel, announcing that today. When actually it would take into effect, we don't know. Are there going to be any carve-outs like there were in Trump 1.0? We don't know yet. And then reciprocal tariffs. Really, for reciprocal tariffs, all direction is pointing towards Europe. We heard that from Stephen Miller over the weekend on Fox News, and Ambassador Ed McMullen said that to you guys in Davos. They want reciprocity, and you have to look at the gaps there are between the United States and Europe. Trump says it's an atrocity, so it sounds like those tariffs will be introduced this week.
I still want to understand why the tariffs are being used. Is it just a negotiating tool, as Michael Zizas said, or is it to raise money for plugging the hole of the deficit? Is it because structurally the U.S. and this administration wants to isolate manufacturing so that you bring jobs home? Which is it?
Well, I think it depends on the target. If it's Mexico, if it's Canada, Trump wanted to come out, use a negotiating tool to get something when it comes to fentanyl and potentially bring up those negotiations for USMCA. When it comes to places like Europe, you will continuously hear reciprocity and that they are unfair to American companies, especially when it comes to the auto industry.
Well, precisely. When we talk about reciprocity, what are we even talking about when we're just talking about reciprocity? Is it the average weighted tariff? I'd say when it comes to the European, it's product by product. It's got to be about autos. There is a very consistent complaint that comes from this president, and it's on autos. And you talked about the difference in the tariffs just last week. Europeans charge a 10% tariff. The Americans charge a 2.5% tariff. If you go line by line, that's something that jumps off the page for this president and something he wants to do something about. The extra wrinkle is this tax story, and how they address this tax story just this week alone if they can. I'm very interested to see how they do that.
Because they have been talking about this VAT that Europe has, and they're saying U.S. companies are spending billions more in Europe than those companies or multinationals are spending in the United States. How they address it, though, remains unclear.
Unmoved so far. In the face of all of this, your equity market's doing okay. We're positive by 0.4%. Coming up this hour, we'll catch up with Victoria Fernandez of Crossmark as markets digest another round of tariffs. We'll speak to Isa Bortansky of BTIG as Trump pledges 25% levies on steel and aluminum imports. And we'll speak to Robert Fishman of MoffettNathanson as we await the latest Super Bowl ratings. We begin this hour with stock steady. Markets digesting another round of Trump tariffs. Victoria Fernandez of Crossmark saying we should experience choppiness in 25, especially in the first half of the year. We wouldn't be surprised to have a 5 to 10% pullback. Be ready to step in on weakness. Victoria joins us now for more. Victoria, welcome to the program. What would drive that weakness to begin with?
Yeah, well, I think obviously you guys have been talking about the uncertainty that we have going on in the country right now. Obviously, tariffs is one of the leading issues on that, but there's a lot of elements coming out of Washington that are continuing to put that uncertainty at play. And I think the question is, what side of the economic balance sheet really does this put us on? There's such conflicting stories, whether you look at the labor market, whether we look at ISM numbers, whether we look at consumer spending and savings going down. There's so many different stories that are out there. It tells us the Fed is probably going to stay on hold because they don't have a clear picture of where that's going. And businesses are going to stay on hold for a little bit until they get a clearer picture of what's going on. So with all of those elements together, it gives us a really muddy picture. We think we could see investors step back a little bit. That might give you an opportunistic time to come into the market. That's what we would see it as, a time to really kind of step in to that weakness.
Let's muddy the picture even more. Let's take last week's data. Everyone's focused on Friday. Go back a little bit. Prices paid on ISM services wasn't too bad. What do you put more weight on, that or you, Mitch?
Well, I'm not sure I would weigh one completely more than the other, but I do think it gives you some conflicting elements. You look at ISM as a whole, manufacturing finally went above 50, right? For the first time in, 26 months, we saw the positive. But you did see the prices paid move a little bit higher on the services. At the same time on Friday, you see inflation expectations go up on the 1 year element, a full percentage point, and you see consumer confidence come down. So again, it's this, balance that we're trying to put together, which tells us there's not a clear path going forward, and we haven't seen a catalyst that's going to change the leadership. You guys have been talking about the financials and how they've been leadership in this market. There's nothing out there that's changing that or that's causing spreads to go wider. So it looks like all of this data coming out, people are just taking a step back, looking at all of it, but not making big decisions on, or at least the market's not at this time, to make a change in leadership.
Victoria, the amazing thing is the market has been fairly steady, but under the hood has been incredible volatility. We were just talking about the Magnificent Seven themselves and just how much dispersion there has been. Kevin Gordon writes in and talks about how Meta is up almost 20% year to date. Tesla's down 16%. If you take a look at Google or Alphabet, it's down about 2% year to date. Is that buyable weakness if you get that kind of dispersion, or do you just chalk that up to consumers, to specific corporate stories that maybe are justified?
I think it's opportunistic, Lisa, because we're not seeing it just in the tech space. You're seeing this bifurcation in utilities. You're seeing it in consumer discretionary. You're seeing it in the tech space. There's multiple sectors where you see this happening. Financials is probably one of the only ones where you've got about 90% of the constituents above their 20-day moving averages and in an uptrend. Everywhere else, even including industrials, there's opportunities there. So for our clients, we're looking at, okay, who has the strongest balance sheets? Who's able to withstand some volatility? We look at debt to cash ratios. These are the things when you say about looking under the hood, I think that investors need to do right now. And it is opportunistic from a stock picker standpoint to go in and find those opportunities that are there for you, but lots of bifurcation across the board in the market that you can use to your advantage.
In every single note that I've read so far, it's talked about the volatility of 2025 and how you can expect it to continue, which maybe is the reason why we're seeing gold at a record high. Are treasuries still the stalwart investment of your portfolio as well, in tandem with gold, as a haven trade?
Well, with all the volatility you're talking about, it does make it a little tricky with yields. Look at what we've seen. Since the Fed started cutting, Fed cut 100 basis points, 10-year yields went up 100 basis points, and now they've come back down some. I think the key in determining where you want to put that money to work, especially in the fixed income market, looking at spreads, obviously, but why are yields coming down? Are yields coming down because, there is this support for a cyclical economy and things are looking good, or are yields coming down because there's this growth concern that's out there? And it's since the term premium is what has been driving yields both up and down. To us, it says there's a growth problem. And if there's a growth problem, you do want to put some safe haven elements in your portfolio. Short-term treasuries could be one of those. Really strong credit could be another. High-quality credit, I would stay away from lower quality, but I would use some safe havens. Maybe it is gold that's there. The liquidity issues that we're going to see in this market tell us that gold could continue to be a strong component of your overall portfolio.
Well, Victoria, Lisa sets me up to ask the Trump question. Last night, he said there could be a problem with treasuries. Does that concern you at all?
I'm not concerned right now, Anne Marie, and I think, you talked about how this administration likes to use uncertainty to its advantage. I think you're 100% correct on that. It really is kind of their MO. And you have these statements come out and people get very concerned, and then things get walked back a little bit or they get explained a different way. With Bessent at the helm over at the Treasury, I feel pretty confident that he's going to be able to take things in stride and keep things at a somewhat even keel there. So I'm not making changes to my portfolio based on those comments. We'll see what comes, but I would be listening to Bessent and see what he has to say.
Hi, Victoria. Appreciate your time. Thanks for being here. Victoria Fernandez there of Crossmark on this equity market. In this equity market, the leadership, sector-wise, it's the financials, it's the banks on the S&P 500, up year to date by about 12%. We've been discussing why the deregulatory effort that most people are expecting, the prospect of M&A picking up. We're looking for deals. Lisa, I think we've got a deal.
Yeah, we got Hyatt in some sort of agreement to buy Playa Hotels for $13.50 a share. It comes at the same time that we're seeing TD Bank selling its entire equity investment in Schwab. Point here is the deals are getting done. Maybe it's just the beginning, maybe it's just on the margins, but the fact that there can be a hotel deal at a time where there is concern about property valuations, given mortgage rates, et cetera, shows that maybe things are thawing just a little bit.
I'm sure you've picked up on how the deal's been financed as well. Expects to fund 100% of the deal over at Hyatt with new debt financing. This market's open.
This market's wide open, and people have been expecting this, and people have raised a lot of money to buy public debt. You think about how tight spreads have gotten. Again, you talk about uncertainty. It isn't being expressed yet, certainly in the credit markets, which traditionally had been a harbinger of what's to come. So right now, not seeing a lot of concern out there.
Equities more broadly doing okay as well. Not much concern here. We're up by 0.4% on the S&P to kick off the trading week. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Trump suggested that Elon Musk's government efficiency team has found irregularities while examining data at the U.S. Treasury Department. It's unclear if the issue stems from government debt or payments processed by the Treasury. Musk's so-called Department of Government Efficiency has been seeking access to Treasury payments data. McDonald's shares, those are rising 1% in the early trade. It reported stronger than expected fourth quarter sales. Global same-store sales climbed nearly 0.5% for the quarter, despite reporting shrinking order sizes. Declining sales in the U.S. were balanced by strong results in Japan and the Middle East. Sales in those regions rose over 4%. And Nike last night returned to the Super Bowl for the first time in nearly 3 decades. The company ran a 60-second commercial featuring more than half a dozen famous female athletes, including Caitlin Clark and Jordan Childs. Nike last aired a Super Bowl ad in 1998. That one featured the San Antonio Spurs center David Robinson and other athletes playing in the nude. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. The official commercial review starts right now. Bramo, what have you got?
Well, I loved the Nike one. I thought that was wonderful.
Was that your favorite?
It was one of my favorites. Obviously, Duncan was the favorite. I think that the Ontario one was pretty right up there. I thought a lot of them were pretty terrible, though. I'm going to be really honest. A lot of the ads were just, they felt kind of flat.
That's the official review. You going to do a column on this later, or was that it?
I'm going to stick with Moana, too.
Okay, all right. Up next on the program, doubling down on tariffs.
We're not that rich right now. We owe $36 trillion. That's because we let all these nations take advantage of us. Same thing, like $200 billion with Canada. We owe $300. We have a deficit with Mexico of $350 billion.
Isaac Boltansky of VTIG joins us next from New York City this morning. Good morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
bond market unchanged here. Your 10-year yield 449.47. Equities elevated by 0.4% on the S&P. Under surveillance this morning, doubling down on tariffs.
We're not that rich right now. We owe $36 trillion. That's because we let all these nations take advantage of us. Same thing, like $200 billion with Canada. We owe 300. We have a deficit with Mexico of $350 billion. I'm not going to do that. I'm not going to let that happen.
So here's the latest. President Donald Trump promising reciprocal tariffs against everyone this week, along with 25% on all steel and aluminum imports. Isaac Boltansky of BTIG saying universal baseline tariffs will be part of the conversation for the foreseeable future, and they could be part of the broader reconciliation effort, but we continue to view it as a bridge too far, given the economic implications. Isaac joins us now for more. So, Isaac, we've got lots to unpack, including some comments on the bond market, which Lisa, no doubt, will get to in just a moment. Isaac, I want your thoughts, first of all, on reciprocal tariffs. When the president talks about reciprocal tariffs, what exactly is he getting at?
Yeah, look, I think we're all just looking for frameworks for how to think about where we are with Trump 2.0. And on the tariff front, I sort of think about it as a spectrum. On one extreme, you have the escalate to de-escalate framework that we've seen. On the other end, you have the full speed ahead. And that part of the spectrum, I think, is generally focused more and more on areas where he thinks that there is a structural imbalance that needs to be addressed. And so whether it's the steel and aluminum tariffs or it's these targeted reciprocal tariffs, I think that those are areas where we should expect meaningful, sustained action because the president thinks there's an imbalance that needs to be addressed. Whereas on Canada and Mexico with those 25% tariffs, I think those skewed much more so towards the escalate to de-escalate, what can I get right now dynamic that we've seen from the president so often.
Isaac, is it fair to assume that if you have a trade surplus with the United States, potentially you're protected?
For now, yes. I think, again, that's part of the shifting sands of Trump 2.0. I think for right now, absolutely. But the caveat that we have there are what other issues come into play, right? I mean, I think that we now understand that, of course, where the president sees structural imbalance and he's looking at the trade deficit as the measure there, we're going to see enormous action. But there are going to be areas of acute action as well based on other political dynamics.
Isaac, we've been waiting all morning for this. We want to understand your interpretation as the Trump whisperer of there could be a problem, you've been reading about that, with treasuries. That could be an interesting problem because it could be that a lot of those things don't count. Therefore, maybe we have less debt than we thought. Why is this not concerning to you?
Well, first off, everything is concerning to me. And I think that that is something we should all be honest about at this point. And I was following Anne-Marie's Twitter last night, like I think a lot of people were, to see if there was any more color, especially from the Treasury Department. But look, from my sense, and again, we've got to take Trump seriously, if not always literally. And I think that his reference there was about specific budget line items relating to spending that the DOGE team has overturned in its work, particularly with USAID. That's my sense. That's what my channel checks have suggested. And so I think that is what we should take it for at the moment. But we're hopefully going to get a little bit more of a clarification from the Trump administration over the next day or so. And I think we're all looking to Treasury Secretary Bessent for clarity there, just to make sure.
When you broaden out, Isaac, there's a fundamental question about how much ripping up the script and destroying some of the status quo to have some sort of disruptive influence to create more efficiency, whether that erodes some of the framework that gives people confidence in the U.S. structure. Is there anything that makes you get the sense that maybe something could undermine people's confidence? Because right now we're not seeing it in the markets in any way, shape, or form.
Yeah, look, I think that all of us were concerned right when we saw President Trump's comments, but even in speaking with clients right afterwards, there was a focus on the fact that, a firm belief that he wouldn't ever question the validity of debt, which to me is a little bit surprising given some of his personal steps, but more so they were heartened by the 14th Amendment and the full faith and credit. And so I think investors are looking for reasons to be somewhat sanguine at this point. And that's obviously concerning given that, you know, it's been incredibly volatile few days over the past few days and few weeks since the president has taken over.
Isaac, if this was the first month of Trump 1.0, would the market have responded differently to his comments about treasuries and these irregularities?
Yeah, look, I think if we hadn't seen all of the action that we saw from Doge, where everything regarding the federal ledger is being questioned, then I think that we would absolutely be terrified by those comments. I also think that if it happened during market hours, we would have had a more dramatic response. But thankfully, it happened on Air Force One over the Gulf of America, and everyone had some time to digest it and think through it. So I think that that's a positive, and I look for more clarity from the Treasury Department over the next day or so, just as a reaffirmation of what I think we all know.
So let's put that to the side. This week is really going to be about tariffs. What's your base case besides the 25% on aluminum and steel? What else are we going to see in terms of reciprocal tariffs?
Yeah, look, I think that it's going to be, I don't think that it's going to be one big announcement. I think that there's going to be a steady flow of news throughout the week. I think that I've heard a fair amount about exemptions already being part of this, and that's something that I think we need to start layering into our calculus, not just for the reciprocal side, but also within the broader Canada and Mexico conversation. I know, for example, you continue to hear about lumber in Canada, something that the home builders have been pushing for. That's just one example of the myriad fronts here of exclusion battles that we're having here in town. So look, I think it's going to be a fierce focus on steel and other metals. And I really think, Anne-Marie, we go back to the fact here that the president is going to go after grievances aggressively. And steel is one that he's had a grievance with for decades. John earlier mentioned autos. He has a personal grievance with Europe and autos. And I think that when we do our risk framework, that should guide us to putting those items high on the list.
Right. When it comes to Angela Merkel and her book, she talked about the fact that Trump would always complain that there's not enough American cars in Europe and especially in Germany, even though you look in New York and there's Mercedes everywhere. Isaac, what other carve-outs could we expect based off the carve-outs we saw in Trump 1.0?
Yeah, look, I think that the building industry has the president's ear so far. So I have focused my clients on lumber and home builders. I think that's one that I'm focused on. I also think that just for Mexico and Canada in general, my sense is that there are numerous off-ramps to sort of let some pressure out of those conversations, especially since the focus is on USMCA renegotiations, which will be taking place in the background. I continue to think ultimately that the president wants a grand bargain with China, right? And I think on that front, we're going to see a steady escalation there. I think that they're going to expand their playbook. They're going to use other parts of their tariff toolbook, if you will, to go after different sectoral tariffs to slowly turn up the pressure on China with the hopes of a grand bargain before he leaves office.
Isaac, appreciate your thoughts, as always, sir. Isaac Boltanski there of BTIG. We've said it a few times on this program. They are moving really quickly. We're going into week 4, and they've done a lot already, that's for sure.
That's by design. We've heard about sleeping pods at the Doge office that Elon Musk has implemented, and sleepless nights as they go through one by one, targeting each of these facets. What will stick? A big question. What comes next? A big question. I'm just still thinking about the list of grievances, and it sounds like something in my household.
There's a lot of list of grievances. He hates trade deficits. I was told that a lot of meetings start out with a top line figure sentence. You just have the trade deficit in front of you between America and that specific country. This is what is driving him. But this is all of the bad news that the market didn't want. The tariffs. We're going to a huge trade week. How long is it going to take for Congress to get their act together and get TCJA extended and potentially other cuts that the president promised on the campaign trail?
Are you about to tariff the kids? Is that where you're going with this?
Mom deficit?
Well, actually, that's a great idea.
It's quite a deficit.
Oh, my goodness, that's great. Extra trash taking activities.
The promise is you repay that deficit over time as a child. You know, that's the promise.
I love this. Well, we have airing of grievances.
They don't have to front-load repayment.
Reciprocity. Well, in their Abramowitz household.
Actually, this is great. I'm going to come up with like a full...
I'll always be in a deficit with my mum.
You know what?
If she's watching.
Oh, that's so sweet.
Always. There's nothing I can do.
Oh, boy.
I couldn't issue enough debt to close that deficit. All right?
That's what
Coming up on the program.
He just closed it.
Francisco Blanch of Bank of America Securities as President Donald Trump promises tariffs.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
I'm surprised it took this long to receive this message, 90 minutes into the program. Using the American way of saying aluminium, get back to Blighty to get rebooted.
Oh my God, are we really doing this?
You're a decade here.
All
right,
Aluminum people.
All right, so you know what?
I've been here 10 years now.
I'll have a foreign accent, and I'll say
You
aluminum.
want to do your
for
Canadian
you.
accent again?
No, let's leave that there. Let's park that one. But you know, I like that you do aluminum. I'll do aluminium. Aluminium.
Been here long enough. Equity futures right now on the S&P, shaping up as follows. We're positive by 0.4%. On the Nasdaq, we're up by 0.7%. Mike Wilson of Morgan Stanley publishing this morning, long financials, the best performing sector on the S&P this year. We stay long amid rebounding capital markets activity. Lisa, prospects for a better loan growth and buyback environment, strong earnings revisions, and light positioning.
And right on cue, we get a deal. We get a deal this morning, which we were talking about earlier. Hyatt buying Playa Hotels with all debt, which tells you just how open the capital markets really are and speaks to the idea that you're getting deregulation in even greater bulk than people expected at the same time that we still haven't seen the deal flow.
How much more of this are we going to see in the years to come? With 2 hours until the opening bell, let's get you some morning movers. Let's cross over to Manus Cranny. Good morning, Manus.
John, good morning. We're 4 weeks into it. It's a rough and tumble. So Cleveland Cliffs is the personification of this 25% tariffs. 2018, by the way, on the first day they were announced, they were up by 7.6%. Imports down by 11%, and 8,700 jobs created in 2018. Downstream, different story. 87,000 jobs went. Roll it over, have a look at Meta. We're on track for day 16 of the rally. Previous 15 days, we've put on nearly 16% on this stock. The CTO talks about new wearables coming, 6 new wearables coming from Meta. Reality Labs made $1 billion in revenue, operating loss. Roll it over, have a look at T-Mobile. What do you get for 15 bucks? You get to tie up with Starlink. That's the offer. The big Super Bowl ad ran yesterday. John, good morning.
Manus, that was fast. Thank you, sir. That stock is up by 4%. We're going to switch to T-Mobile, $15, attached to Starlink.
The thing is, you can be, apparently, according to the commercial, which is one of the few I did see last night, you can be on any carrier and try out the Starlink, T-Mobile situation.
Did you try and sign up?
No, absolutely not. I was in bed.
Oh, you didn't see it. Neither did I. All right. On our radar this morning, President Donald Trump saying he plans to unveil reciprocal tariffs this week against, quote, everyone, without specifying exactly which measures he plans to take. This as Trump says he's set to impose 25% tariffs on all steel and aluminum imports.
So that announcement will come today. Hopefully we get more details when this potentially will go through, and are there going to be any carve-outs when it comes to aluminum and steel. And then the rest of the week, he said maybe Tuesday, maybe Wednesday, he will announce these reciprocal tariffs. Obviously, when we're talking about reciprocity, the administration has made it very clear. There were a number of individuals out there speaking to the press, most notably over the weekend, Stephen Miller, that it's going to be Europe when it comes next, and he's going to be squarely focused likely on the auto industry.
I'm still thinking about the airing of grievances, because if you really want to understand what this tariff pathway is going to look like, you have to understand what exactly kind of gets his goat. When you talk about a trade deficit, in different areas, it goes to interesting places in the world, not just Canada, and not just Mexico, and not just Europe, but Southeast Asia, which has taken on a lot of trade from China. So it really has become something that's created a lot of angst in a lot of places.
Europe comes up continuously.
Yes.
Again and again and again. And autos come up continuously, again and again and again. I'd be very surprised if autos were spared from this, wouldn't you?
Well, you want a Ram truck in, Versailles. I mean, that's sort of the goal here, is why do you not see any of the Fords and the GMs on the streets in Europe when you see all of the Peugeots? Actually, you don't see that many Peugeots in the U.S.
You don't see Peugeots here, but you do see Porsches, you do see Mercedes, you do see BMWs, you do see Range Rovers. Trump has a problem with Europe because 10% is what it costs when you do the imports from American cars going into Europe. 2.5% is the tariff for those European cars coming to the United States. And when they say reciprocity, this is exactly what they're talking about.
Without a doubt, it goes to autos. Do you remember the chicken tax? You ever read about the chicken tax? From the 1960s, so the Europeans put on a chicken tax, and it annoyed the Americans at the time, so they put a 25% tariff on trucks, which is why when you get into the auto situation, it's actually a little bit more complex than the 2.5 versus the 10, because there's also a big tariff on trucks, on the European trucks.
Do they want chickens? Is that what we need to do?
It goes back a long, long way. The point of that story, though, the point of the chicken tax mess of decades ago is that once the tariffs goes on, for whatever the reason they went on, they can stay around for a long, long time and no one gets around to taking them back off.
Well, we saw that with the Biden administration with a lot of the tariffs that came on then.
Yeah, absolutely. Biden kept those tariffs on when it comes to China. And we should note, today is when those reciprocal tariffs China put on, $14 billion of U.S. goods, come into play today. Interesting, though, on the China tariffs, that de minimis, that is getting a little bit of a pause right now where they work out exactly how they're going to enforce that at the border.
We'll talk more about that in just a moment, so stay tuned for the latest on Shein. I want to turn to this story. The Kremlin declining to confirm or deny that the Russian President Vladimir Putin has spoken with President Trump. The New York Post reporting Trump said they discussed the war in Ukraine. U.S. allies expecting the administration to unveil a plan to end the war at the Munich Security Conference, which starts on Friday.
Two things about this call are a little fishy. One, Mike Waltz, the president's national security advisor, refused to elaborate and kept punting. And he says there certainly are a lot of sensitive conversations going on. But then I take you to Dmitry Peskov, an individual who I used to deal with as well, who, if a call happened, he would certainly know. Many different communications happen, and these communications happen through various channels. I personally may not know something, may not be aware of something. This is why I can neither confirm nor deny in this case. Well, it sounds like Dmitry Peskov is unaware of this said call.
What's the objective here, I guess, is the key question. Is it to believe that Trump is on top of negotiating all of these things very quickly to get some sort of resolution with Ukraine and Russia in short order? This is the reason why the market takes a lot of his commentary in stride. It's unclear what the goal was. It's unclear whether it happened. It's hard to verify. And so the market moves on and just continues as though nothing happened. And that seems to be the state of play.
We can move on to the latest on trade. I want to get back to this. I mentioned Shein. So Shein's asking some of its top Chinese suppliers to set up new production lines in Vietnam. Sources telling Bloomberg the efforts have been in the works for several months, but the fast fashion company is looking for quicker implementation to avoid Trump's tariffs on China. This is exactly what you were getting at a few moments ago.
To me, this is the big story. How much are you going to see not trade cut off, but what we've seen over the past 5 years, 6 years, which is a huge shift toward Vietnam, Thailand, Malaysia. The trade deficit with the U.S. in those regions has skyrocketed, and a lot of it has come from China with people trying to avoid these tariffs. People in Malaysia, I was speaking with a trade executive there, they're concerned. When is the focus going to turn on them? Because the trade deficit's getting bigger, and at a certain point, they're not going to be able to avoid the glare of the president's scrutiny.
Nobody's spared on this front. I think that's the takeaway at the moment. In the first 3-4 weeks of the second term of the President of the United States, it's only week 4. It's unreal. Let's stick with tariffs. President Trump saying he'll impose 25% levies on steel and aluminum imports from all countries. Francisco Blanch of Bank of America writing, the rationale for the use of tariffs has expanded from a response to an unfair subsidy or advantage to the pursuit of political objectives. Trade war is now the continuation of politics by other means. Francisco joins us now for more. Francisco, that's quite a statement, and a lot of people might agree with you as well. The situation, I'll put it this way, feels fluid. I'm being diplomatic. What does it mean for some parts of the commodity market versus, say, others?
Well, John, thanks for having me again in the program. I'll tell you, it's very confusing. We've seen a big impact on the prices of regional commodity differentials. We saw it last week. Prices of Canadian gas versus U.S. gas, Canadian crude oil versus U.S. crude oil. We are seeing it today with the prices of regional aluminum and steel premium, and in the U.S. But also we are seeing the effects on the term structure of commodity markets, because as these tariffs get applied, you don't know exactly when they're going to be applied. So people are trying to rush the commodity in, so you're getting that if you like, that mini spike up the front, hoping that maybe you can squeeze a little more product in before the tariff hits. So it's impacting really regional differentials. It's impacting the term structure of the price, spot versus forward. And of course, some of these measures are being announced in the morning and taken back in the evening. So we are a little concerned that there might end up being some negative economic effect because of all this uncertainty. But certainly, as I pointed out, I mean, this is really a negotiation tactic, and that's, I think, what the market believes. But also, as you pointed out, some of these tariffs, they get put on and they just stick around for a while.
They stick around for a while, which means what potentially could happen to trade flows? Are you already seeing trade flows around the world start to shift?
Well, the reality of the matter is, in the last trade war we had in 2018-19, we ended up seeing some damage to global PMIs, right? And ultimately, of course, we ended up with COVID in 2020, so everything became very distorted. But we had a pretty strong cyclical backdrop in 17-18 when all this tariff started, when trade war started. So we are a little concerned about the negative effects. Remember, at the end of the day, a tariff is a tax, and when you put a tax, that tax needs to be split between the importer and the clients of the importer, and maybe some of it gets washed out in the FX. But I mean, to give you an example, if you're a U.S. industrial that's buying aluminum, you're gonna have to find a way to pass that through, and most likely that's going to impact your margins as an industrial producer. And America, buys some raw materials, but also produces advanced manufacturing. And now the question is, how deep does that supply chain go? Do you have the tariffs just on the aluminum or also on the aluminum product? And remember, last week, some of the most vocal voices against tariffs came from the U.S. refining industry. They said, we buy all this cheap Canadian crude oil, cheap natural gas from Canada, and we turn it into amazing products like gasoline and diesel that are top of the line. And that's one of the reasons the U.S. refining sector is so competitive. The tariffs would have really hurt that, right? So you have to be careful. You never know where things are going to come from, and it's really one of the challenges that we are seeing across the board.
I'm glad you brought up 2018, because that's when the U.S. hit nearly $7 billion of European steel and aluminum exports with duties. This was under Trump's first administration. And then, of course, we had this retaliation from Europe on things like Harley-Davidson motorcycles. What kind of retaliation can we expect this time around?
Well, I think one of the big challenges that Europe has is obviously Europe, to your point, has a trade surplus with the U.S. But there's also a large services deficit on many areas, right? So there's sort of talk about tech potentially being involved as a retaliatory sector. We could see some retaliation, but I think importantly, the European industry is not in great shape. You're looking at very high domestic energy prices as a result of the Russia-Ukraine war, cutting off supplies of energy, pipeline gas into Europe. You're seeing also weak demand for European products in China, which of course has a domestic demand problem that's fed on into European industry. So I'm not sure Europe is in a great position from an industrial standpoint to cope with rising tariffs from the U.S. So it's a frail moment for Europe. Growth is barely scratching 1%. Germany's been in pretty much recession for 3 years running, and now we're seeing natural gas prices spiking again in the past few days, right? So it's a tough combination. I think Europe is a tough spot. But of course, if the Russia-Ukraine war ends, I think things will ease, right? So that's perhaps the big hope, is that we're going to see the end of the Russia-Ukraine war.
Francisco, that's a muddle of uncertainty. What's your highest conviction amid a muddle of uncertainty at a time where one of these tariffs, if they go through, could be inflationary or deflationary if it really suppresses growth?
Well, so for us, one clear winning area has been the precious metals complex. So we've been very bullish on gold and silver. We have a $3,000 target for gold, which today we scratched 2,900. Silver, we believe it goes $35 an ounce. And so we see that as a winning area within the commodity space. Continued diversification from central banks, but also investor portfolios. Oil, a little more range bound. Difficult to call here between this barrage of tariffs, but also sanctions, right? Sanctions on Russian energy on the way out by Secretary Yellen. And then there is the discussion around Iran, what happens to Iran. So to us, the cyclical commodity complex is really on the edge with PMIs around 50. And so the clear trends are like I said, in the precious metals and perhaps in some of the softs and the meats. The grains market also complicated to call here with forecasts shifting quickly and suddenly adding to upside pressures on a market that was on a downward trend for a while.
Francisco, can we finish on energy? I think we're used to, historically, people like me at least, being long the whole complex at the same time. Within energy, you're starting to notice dispersion, reasons to be bullish some parts and bearish others.
Right. No, we do, and certainly, I think we've been more bearish crude oil this year. It hasn't played out that way. I think the tariffs on Russia the sanctions on Russia were quite unexpected. They distorted some of the volumes and therefore created tightness in the market that probably reduced the surplus that we were projecting. So now we're more neutral. We think oil is going to be averaging, Brent is going to be averaging 75 and 71, 72 for WTI. So we see a more range-bound market. But yeah, the energy complex is vulnerable to cyclical demand conditions, and it's also, frankly, vulnerable to OPEC restarting or bringing production back in April, right? So we'll see if OPEC does that. But at the same time, you got other factors, like I mentioned, on Russia sanctions and potentially Iran maximum pressure, which has been shelved for now, but could come back, right? So energy is a little more complex. There is plenty of spare capacity, so people are not truly worried. But at the same time, there's low inventories, and that keeps the market in a range, in that kind of $70, $80 range environment with a curve in backwardation. So that's the backdrop in energy. Natural gas more complicated. We see strong demand for power, driving gas in the U.S., in Europe, elsewhere. And we have a tight market for power. So it's electrons versus molecules here.
A lot of competing forces, that's for sure. Francisco, appreciate your time, sir. Thank you. Francisco Blanch there of Bank of America. Crude at the moment, Brent, mid-70s, 75.60, up on a session by 1.3%. Similar move on WTI crude to start off the week, in and around 72. Let's give you an update on stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Israel has pulled troops out of a belt of land in the Gaza Strip after the return of 3 more Israeli hostages. With initial truce period half over, mid-level Israeli envoys have set off for a new round of talks in Qatar. Meanwhile, the IDF said yesterday that Israeli security forces have expanded a counterterrorism operation in the West Bank. Elon Musk says that he is not interested in buying TikTok's U.S. business and has not put in a bid. The billionaire made the comments last month at a conference in Germany, but it was first reported on Saturday. Musk said he usually builds companies from scratch and does not use TikTok personally. And the president made history last night as the first sitting president to attend a Super Bowl. The crowd cheered for Trump when he was shown on screen during the national anthem. In a pre-taped interview with Fox News before the game, Trump picked the Kansas City Chiefs to win the big game, which, of course, they went on to lose. He reportedly left the game early before the Eagles soared to victory. And that's your brief, John.
Danny, thank you. Appreciate it. More from Danny in about 30 minutes. What a spectacle. Seriously. I know the audience numbers are bigger for the World Cup final. We all know that outside of the United States. But when America puts on a spectacle, it puts on quite a spectacle.
America's good at spectacles. And I will say you slipped that in very nicely where you tried to undercut it. But
well, I know what the Europeans are thinking right now.
Okay, you can say that, but we're good at, putting on the show. The big lights.
Trump is also totally embracing European football.
The World Cup
he got the World Cup on the back of the Resolute desk.
I've noticed that. Up next on the program, it's the biggest night in TV.
How can we tell stories around where sports meets culture? Super Bowl being a great example of sports and culture. We want to broaden and expand the reach of America's biggest sporting event and a cultural moment to many more people.
That conversation up next with Robert Fishman of MoffettNathanson from New York City. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Kicking off the trading week with stocks positive by close to 0.5% on the S&P 500. In the bond market, bond yields going nowhere. Your 10-year, just about 449. Let's call it 450. And the surveillance this morning, it's the biggest night in TV.
Where we're most interested is how can we tell stories around where sports meets culture. Super Bowl being a great example of sports and culture. We want to broaden and expand the reach of America's biggest sporting event and a cultural moment to many more people. We have nearly 100 million monthly active users. The majority are Gen Z and millennials, and the majority aren't subscribing to cable. The reality is TV has incredible momentum. We've been growing really quickly, and we continue to invest and do more around the types of content that we put out there.
So here's the latest this morning. Viewership figures for last night's Super Bowl expected to set new records, with data coming in later on today. Fox and its streaming service Tubi hoping to top last year's broadcast that saw a record 123 million viewers tune in. Robert Fishman of MoffettNathanson joins us now for more. Robert, welcome to the program, sir. Just how profitable is an event like this for the likes of Fox?
Yeah, it's a great question. Good morning. So when you think about the profit, you have to think about how the profit actually gets allocated and how the revenue gets allocated. Just from a pure advertising basis and the viewership that you're talking about, that these networks don't typically make a lot of profit just on advertising, but you have to, when you think about the allocation of the retrans and the affiliate fee dollars that they get, these events become very profitable over the length of the contract. But what you're seeing here is the first years of the contract, you're going to get less profits initially. So it starts to ramp up over the length of the long-term deals that they have here.
Robert, how important is it to traditional TV networks to maintain exclusivity over this at a time when this is one of the biggest, if not the biggest, event-based viewing opportunity at a time when they're losing market share?
Well, you're exactly right. It is by far the biggest event of the year for U.S. television. I know you're talking about earlier worldwide basis, but in terms of the U.S., I mean, there's nothing that comes anywhere close to the Super Bowl. And the reason that these broadcast networks and traditional TV companies make sure that they have the Super Bowl is exactly for that reason, to bring all the audiences together for that one special night. So it's critical that they maintain exclusivity of those, of these big events and of the Super Bowl. But, you know, as we wrote last week, this year for the NFL has been a year of disruption. You did have Netflix come in and air their first 2 games on Christmas. You had Amazon have their first playoff game. You even had ESPN Plus have an exclusive game. So there's a lot of disruption that is happening within the traditional media ecosystem.
And Fox will be a huge winner. The ad prices, some of them topping $8 million. Yet you downgraded Fox a few weeks ago. Why, Robert?
Yeah, we've been a long supporter of Fox, and it reached our valuation point where we thought that the risk reward from here was not as substantial on the upside. We still very much strongly believe in the fundamentals of their business, and they've proven that they can be a different media company because of the assets that they have focused on sports and news. But at the same time, we just had to take a breather given where the valuation is, but very much support their management team and the company and the assets they have, especially Tubi, as you showed earlier.
Robert, just quickly, we're all on the lookout for consolidation, M&A, and it could be happening in your space in a big way over the next few years. What are you looking out for?
Well, that was part of our call where we actually upgraded Warner Brothers Discovery because of the momentum in terms of consolidation that's happening within this industry. As I think we all know, Comcast is looking to spin out their cable networks. Warner Brothers Discovery is looking to restructure their company. And there's just pressure on all of these companies, given the ecosystem around them with advertising declines outside of sports and outside of football, to really do something to fix these businesses, because they're still under a lot of pressure, and really what they're going to be pushed towards is consolidation ahead.
Robert, thank you, sir. Robert Fishman there, MoffettNathanson. A lot of properties looking for a home in the year ahead.
With a complete lack of clarity on what the media landscape is going to be and how advertising can be most targeted and profitable.
So who wins? The banks, apparently.
Evidently.
Based on the year so far. Coming up, Liz Ann Saunders of Charles Schwab, Michael Halen of Bloomberg Intelligence, Jonathan Pingle of UBS, and Erin Brown of PIMCO. The third hour of Bloomberg Surveillance. Up next.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that, other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
We continue to think that the U.S. will outperform.
There is more to be had and gained from the rest of the market, not just a handful of names.
There's massive enthusiasm, but certainly investors have been expressing some skepticism.
I embrace the idea that I know I don't know.
Volatility is back, in that you have to kind of not react to everything.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, equities doing okay, up by 0.5% on the S&P. On the Nasdaq 100, up by close to 0.7. We've got a big week coming up. On Wednesday morning, CPI 8:30 Eastern Time, a double dose of Chairman Powell in front of the Senate on Tuesday, in front of the House on Wednesday. As the week progresses, you'll get more data. Jobless claims and PPI coming on Thursday. On Friday, U.S. retail sales.
So CPI is going to be the big data point. Do we get confirmation that inflation is sticky, that things are gearing upward, especially at a time where we've gotten surveys showing people are expecting inflation to increase? Just want to note, we also get a slew of Treasury auctions. We get to test some of this concern. We get $58 billion of 3-year notes tomorrow. We get $42 billion of 10-year notes on Wednesday and $25 billion of 30-year notes. I think that's also going to be really important.
Secretary Besant is doing a good job, I would say, at being very careful about how he talks about the Treasury market. His principal, I would say, is doing a questionable job of doing exactly the same thing, particularly over the weekend.
This is the reason why I find it most interesting to see how some of these auctions go. There could be a problem. You've been reading about that with Treasuries. This, according to the President of the United States, that could be an interesting problem because it could be a lot of those things don't count. Therefore, maybe we have less debt than we thought of. No one cares because they just look at this president as saying something off the cuff, and it probably has to do with line items, and King Besant is in charge. Where is the Treasury Department to come out and say, okay, we believe in the full faith and credit and we'll pay back?
Well, it's not immediately clear what he was talking about. The market is taking this as he's talking about payments processed through the Treasury Department. But what the president said, if you listen to his words exactly, was he said there was a problem with treasuries, which is why finance Twitter, just before you can imagine all these same kind of guys were probably sitting down ready to watch the Super Bowl, had a little bit of a heart flutter because they're saying, is the President of the United States actually questioning the full faith and credit of the U.S.?
Quick observation. I think we have to draw a distinction between things that the financial media care about this morning and things that financial markets cares about this morning. Financial media is going to have a big conversation about tariffs, about what he meant by treasuries. Then you're going to look at equities. Equities are up. Then you look at the bond market. Bond market's doing nothing. 10-year yield's just about unchanged at 4.49. The 2-year at about 4.30. Nothing to see here, Lisa, based on the price action.
Well, the only caveat I would say is gold. Gold at a new all-time high. All of these things, yes. There still is solid earnings. We saw McDonald's beat on an international basis. We've seen earnings come in fairly strong. We've seen Meta communicate well their AI strategy, and so they're flying. A real question here about whether it is getting eroded under the surface, but right now, nobody's paying attention to this, and frankly, as far as tariffs are concerned, a lot of people view that as a negotiating tactic and just getting it off his chest before they go to the pro-growth policies.
Just an observation, of course, things can change throughout this morning. Coming up this morning, in the next hour or so, we'll catch up with Liz Ann Saunders of Charles Schwab as investors await another round of trade tariffs. We'll speak to Jonathan Pingle of UBS looking ahead to Wednesday's CPI report, and Erin Brown of PIMCO on why US markets are still the place to stay invested. We begin this hour with stock steady. Investors processing President Trump's plan to impose 25% tariffs on all steel and aluminum imports. Liz Ann Saunders of Charles Schwab expecting further volatility. External and internal choppiness is likely to persist as ongoing tariff news gets digested. Liz Ann joins us now for more. Liz Ann, welcome to the show. It's always good to see you. We're processing that news again this morning. More tariffs and the threat of additional tariffs. The consumer, I think, in focus for us all, particularly after the data we got on Friday. How strong are these headwinds for the consumer at the moment?
Oh, it depends on the pricing power of companies being hit with the tariffs, and that's what's hard to judge at this point. We can start to look at the 2018-2019 playbook, and you did see a significant pass on to the consumers. There's always been a lot of discussion of it wasn't broadly inflationary in 2018-2019, and that is true. But if you break out any variety of inflation data, particularly CPI, and you look at tariffed goods versus non-tariffed goods, you did see the hit not just to inflation, but consumption. You saw a big decline in purchases of appliances, particularly washers and dryers. Now this is a little broader, obviously, so I think it's going to be harder, a little bit harder to try to subset where the hits are, but the pass-through is still likely to be through to the consumer.
Liz Ann, how do you read a morning like this one, where the financial media is focused on tariffs and comments around the treasuries and the market looks pretty sanguine? How seriously do you take some of these things that could potentially be pretty big headwinds to both stock and bond markets?
Well, I think the media is doing its job in trying to get the public to understand tariffs and their impact and say at the extreme, which I think generally we are all assuming, and maybe I would say the market is assuming that they won't go to the extreme, that they are some version of a negotiating tactic to get concessions and whatever that definition means. So I think markets are thinking that way, but I think the media is right in getting the public to understand not just the broad impact of tariffs, but even understanding actually who pays the tariff. That is still, I think, fairly misunderstood out there in the public domain, maybe because of the media shorthanding, saying things like, tariffs on China. Well, it's tariffs on imports from China, the tariff being paid by the U.S. company. So I think it's appropriate that there is a lot of detail being put forth by the media. For whatever reason, right now, the market is discounting that and saying this is not going to have a broad economic hit.
You talked about the 2017-2018 parallel, and I wonder how far that can go and where it diverges at a time where the positioning in markets is completely different than where it was then. The overweight to equities is stronger. Yeah. Rate structure is higher. How much is this similar and how much is it not?
Well, the background conditions, you're absolutely right, are entirely different currently relative to 2018, not least because that was the pre-pandemic world and we're in the post-pandemic world, and those worlds have shifted quite dramatically, particularly as it relates to trade and how much shifting was done from places like China to other areas, inclusive of Mexico, as well as other parts of Asia. And you were talking about it earlier, Lisa, Vietnam and Cambodia, and how do those adjustments get made? Another really important difference between that era, since you mentioned 2017, is we were in the beginning or the anticipation phase in 2017 of major tax cuts. Now we're talking about the extension of those tax cuts. So I think the juice on the tax side of this is not quite to the degree that it was when they were brand new tax cuts. I think the deregulation piece is a growth booster, but I don't think you can apply that same tax playbook from 2017 to now.
We know how Trump feels about tariffs, and obviously he's eyeing Europe. That was made very clear as well from one of his advisors over the weekend. One thing Stephen Miller talked about on Fox was that other nations around the world use the VAT to get an unfair trade advantage against the United States. Jonathan's been asking this all morning. How will they have a reciprocal tax when it comes to the United States and Europe?
I wish I had concrete answers to these questions. I have to say, Emery, watching this, getting the data, getting the headlines on this, is just exhausting. It really is exhausting as we all try to gauge the impact of this. It is a little bit of an apples oranges when you are doing, or at least proposing, reciprocal tariffs from within the United States relative to a trade balance, perceived or otherwise, given the VAT structure over in Europe. How this all ultimately unfolds, I have no idea.
So as you look for the rest of the year, a lot of uncertainty out of Washington, D.C. What do you do?
Well, I think the good news is that not only has the market been fairly resilient, but the breadth within the market has been quite impressive too. There's only one sector, interestingly, that's down year to date, and that is technology. Every other sector is up. I think there is a connectivity to fundamentals. The two best performing sectors year to date are financials and communications services. We're in earnings season right now. That's where the strongest earnings growth has been. So you're also seeing it at the factor level. And I think it's the navigation within asset classes that becomes important in this environment. You know, within the equity sphere of a portfolio, you want to make sure you're staying up in quality, that you are looking for the combination of value factors and growth factors, almost thinking of the old acronym of GARP. It's not used as much anymore, but that blend of factors that allows you to look for reasonably valued companies, but with also that growth trajectory. I think it's also important to stay diversified across asset classes. MSCI EFA is the best performer among all the major indices, inclusive of the U.S. indices. And I think that broader diversification across asset classes, it's those traditional disciplines. We talked about the media a lot, not very fun to talk about, but diversification across within asset classes, taking a high quality approach at the factor level. I think that's the best way to navigate through this.
Is this a trader's market and not an investor's market, Lizanne?
I don't know that I ever think it's not an investor's market. I think the distinction there has to do with time horizon. And I think arguably it's even trickier to be a short-term trader in this backdrop, particularly because of all this policy-related uncertainty and the manner through which we get announcements on that front. I actually think it's a better backdrop for longer-term investors. We have price discovery again. We have the return of the risk-free rate. So I think it's to the benefit of not just longer-term investors, but it's also leveled the playing field a little bit for active relative to passive. And I think that's good from an investor's perspective.
Lizanne, always good to see you and catch up and get your thoughts. Thank you. Lizanne Saunders there of Charles Schwab on the latest. It's a fascinating time to be in this market. Discretionary, a little soft. Banks are still doing well. Kevin Gordon, Lizanne's colleague, talked about that dispersion. You mentioned it over the past 30 days. To see Meta up by close to 20%, to see Tesla down by 16%. There's a lot to get your hands around here at the moment.
I keep going back to this as a storytelling market. Everyone's telling a different story, and each company has a different reason for it to do well or not. And you're seeing that dispersion increasing. What was it? Who was it who said that an investment is just a trade?
Mike Platt.
That went wrong? I kept thinking about that.
Yeah, but he's like classic trader, like hedge fund legend.
Well, I just wonder, is this a trading market? And if it's so, it's going to be a need for a lot of massages later.
Tough to trade. I will say this, though. I've heard some great tactical calls. The likes of BlackRock getting long Europe and taking that overweight off US equities to close out 24 coming into 25. That's already one of the calls of the year so far.
You're seeing these narratives shift very quickly. It's going to be inflationary with tariffs. It's going to be deflationary with tariffs. And you can see it shifting in real time. If you can get ahead of those, if you can understand the shelf life, and if you know how to read, Trump, then maybe you can win big.
There's a lot of ifs there. That's for sure. Equities right now on the S&P up by 0.5% with an update on stories elsewhere. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. T-Mobile shares are higher by nearly 3.5% in the pre-market. The wireless carrier announced its partnership with Elon Musk's Starlink satellites for off-the-grid texting and data in a Super Bowl ad last night. The perk will cost $15 a month for most T-Mobile plans and will launch in July. TD Bank is set to sell its entire equity investment in Charles Schwab through a secondary stock offering. Schwab has agreed to repurchase $1.5 billion of its shares from TD, conditional on the completion of the offering. According to TD, the bank will continue to have a business relationship with Schwab. And finally, fast fashion giant Shein is asking top suppliers in China to set up new production in Vietnam. People familiar tell Bloomberg that the company is looking to avoid the risk of new tariffs on Chinese goods. Shein says it will offer higher procurement prices of 15 to 30% while promising bigger orders. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes. That is one of the under-radar stories this morning, and I think it should be very much on the radar in a big way. Shein. If all that business starts going to Vietnam, is Vietnam next in the firing line for Trump's tariffs? And you raised the prospect of that a little bit earlier.
This has already been the story. We've seen this over the past 5, 6, 7 years, that the increase in the trade deficit that the U.S. has with Vietnam, with Malaysia, with the Philippines, with these other Southeast Asian nations that have taken on a lot of the business from China, it's only going to increase. They know it's only a matter of time, and they're hoping they don't have to choose between China and the U.S.
So do you go from country to country from a tariff perspective, or do you just put on a blanket universal tariff? Is that where we end up? We heard the threats of it on a campaign trail. Is that where this ends?
If it does, then that's going to increase the prices pretty significantly across the board, particularly for retailers with complicated supply chains. It's going to create a real issue, and it's going to be felt by some of the people who are in his base.
This is deja vu to what the U.S. has experienced vis-a-vis China and Mexico. The back door of Chinese goods, cheap Chinese goods, coming to Mexico, to the United States. This is just China's version, maybe, of these Chinese corporate versions of friendshoring.
Yeah, the unintended consequences of some of the tariffs from back in 2017-18. And next on the programme, the Morning Calls Plus, Michael Hayden of Bloomberg Intelligence reacting to McDonald's earnings and the state of the U.S. consumer. That stock is up by 1.8%. The opening bell 1 hour and 15 minutes away.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The opening bell is about 1 hour and 12 minutes away. Equities are doing okay, up by 0.5% on the S&P 500. In the bond market, the 10-year going nowhere, 449. In commodities, crude up by 1.5%. And as Lisa's noted a few times already this morning, gold, all-time highs, another all-time high. Where are we at now, 2,900?
Yeah, 2,900, which is double where it was 5 years ago. At a certain point, you have to wonder, what is the message? Gold is telling us something. You have to listen. And is it this is the ultimate volatility hedge at a time where you have both central bank buying and the potential for inflation and deflation, and it's sort of everything all at once.
Gold is up by 1.6%. Let's get you some morning calls. First up, Evercore ISI adding NVIDIA to its tactical outperform list, saying recent weakness is a buying opportunity. That stock is up by just 0.15%. Your second call from TD Cowen downgrading Merck to hold, saying it no longer sees viable arguments for outperformance. That stock is down by 1/3 of 1%. And finally, JP Morgan raising its price target on Home Depot to $475, citing solid West Coast and high-end housing trends. That stock is up by close to 0.75 of 1%. Let's stick with the consumer. McDonald's beating fourth quarter expectations, international growth offsetting a decline in US sales. Joining us now to discuss, Michael Hayden of Bloomberg Intelligence. Mike, welcome to the program, buddy. It's good to see you. Talk to me about the difference between what's happening domestically in the United States versus internationally abroad for this company.
Yeah, it was the E. coli. It was the E. coli breakout in late October. Hit the news wires in early November, and McDonald's had a lot of momentum in October. The $5 meal deal had brought some low-income consumers back into the fold. Traffic was positive, I think, for the first time in 2024. And then the E. coli outbreak kind of put the brakes on all the progress they had made in the States. And that's really what the difference is. It's nice to see international sales do a little bit better than expected, but investors are really, interested in the, seeing some improvement in the U.S. So we want to see the cadence of comps throughout the year end, and then we'd like to hear some information about how they've done so far, how they did so far in January.
Michael, I'm curious about the consumer and how much tolerance there is to accept higher prices at a time where the $5 meal was a successful promotion. Before you get there, is there any takeaway from the E. coli issues with respect to bird flu and what we're seeing with eggs and how that could affect a whole host of different fast food places in the United States?
Yeah, well, you could see your breakfast sandwich prices go up, that's for sure. McDonald's is fully franchised here in the United States, so that's not going to impact their results moving forward, but it could impact franchisee profitability because, to your point, low-income consumers continue to be strapped due to all the inflation that they've encountered here over the last four years or so. But we're bullish about the restaurant space in the United States in 2025. 2024 was basically a restaurant recession. Right. Economic indicators, however, are improving. We're seeing assets like the gold, this S&P 500, crypto, home prices all near all-time highs. So we think that'll motivate high, middle income and upper income consumers to spend more. Right. And we've seen better restaurant results post-election. So there could be some animal spirits here. People just feeling a little bit more confident about the future and spending a little bit more at restaurants.
When you put that together, Michael, are you saying that you don't think that they can pass along prices, or that you do the higher prices, that they will meet with a consumer that still has money to spend and is willing to do so? Are you saying that consumers are less price sensitive?
It depends on who your customer is, right? For chains like, say, Chipotle or Shake Shack that have less exposure to low-income consumers, they're in a better position, and they're going to more easily be able to pass off price increases. Quick service, about 30% or so of their transactions are by low-income consumers, and so because of that, they're going to be a lot more careful this year about raising their prices because their customers are the ones that are going to be pushing back.
Michael, we saw Trump on the campaign trail really embrace McDonald's, embrace the Big Mac. He also serves it sometimes when he's on Air Force One with some of his nominees when it comes to, there's the picture there, when he was flying up to New York. Has there been a Trump effect at all when it comes to McDonald's sales?
We've really been focused on the E. coli issues. I don't know if there's been any Trump effect. If there was, maybe they'll talk about it on the call. But yeah, those pictures were pretty funny on Air Force One. I definitely appreciate the one with RFK. He looked super uncomfortable.
Well, Michael, that's the point. RFK in the mix. They faced down the challenge of GLP-1s. Can they face down the challenge potentially of RFK? What could that mean for that business?
Yeah, listen, I think it's a bigger issue for the companies that provide the food. Right? Will there be some reformulations necessary for some of the food? Yeah, but McDonald's doesn't manufacture that food, right? So I think there's going to be a bigger onus on the food service manufacturers if any changes are made.
Michael, could they make McDonald's US a little bit more like McDonald's Italia? Do you think they could make that change? The menu's better, the food tastes better. Can they make that shift?
I don't know. The Italians have more discerning taste, so I guess they had no choice over there. But I don't know, man. It's a tough one.
Michael Hayden of Bloomberg Intelligence.
You have never eaten at McDonald's.
In Italy?
You have?
Absolutely. I have Peroni on tap.
I don't believe you. I'm going to have to call Mama Farrow today
Okay,
to find out.
she can validate that.
I will
right?
say McDonald's.
Because she was in there too.
McDonald's in Europe do also have gluten-free buns. They do cater a little bit more to people who are not eating, the generic McDonald's meal.
They try harder. They try harder. Don't you get that sense? I do.
I do. Also, in Italy, according to my Italian family, it's very cool to go to a McDonald's, and it's seen as a treat, where in the United States, it's seen as this everyday fast food.
Yeah, it's a day out.
On the
I'm with
run.
you. It's a very, very different meal. I agree.
Come on, it's America, and you go into it, you get the fries, you get the nuggets, and it's just
I love
you ever
this
had
country.
hash browns for breakfast? And by the way,
Of course.
the last time you went to McDonald's in Italy, you were a kid. You said that your mom was there. I mean, you haven't eaten there for a long
You guys
time.
are family all the time. What are you
Really?
talking about?
What
To
was the
Italy,
last time
yes.
you went?
To McDonald's?
Yes, in Italy.
Not in Italy. For a long time in Italy. But in the US, yeah.
I went to the one in Puglia during the G7 because I wanted to try the gluten-free bun.
McDonald's breakfast, Palm Springs. All right? Do you want the date? I can give you the date if you want.
Receipts.
Coming up on the programme. Too early for the tease. Jonathan Pingle of UBS, Aaron Brown of PIMCO, and here's an extended market check. Equities on the S&P, firmer by 0.5%. We mentioned on the programme a little bit earlier the distinction between what we've been talking about all morning and what this market is trading on. What this market is trading on is not what we've been talking about all morning, the threat of tariffs, the issues around the debt, the treasury market that the president seemed to allude to. We're not trading on any of that this morning.
We keep getting upside surprises in a host of economic data other than consumer sentiment, and a lot of the companies that have reported earnings are still doing well, like McDonald's. We're not going back to that, don't worry, but I will say it really comes down to the nuts and bolts, and everyone's trying to clear out the noise.
When it comes to what Trump's talking about, it's noise right now. Until he sits in the Oval Office and maybe signs something and it becomes executive order or memorandum, the market doesn't need to pay attention to it, maybe not.
McDonald's breakfast is the superior meal at McDonald's, I think.
I think that's true, which is the reason why birds
No,
still
the
matters.
fries. The fries are the best.
Because, the eggs.
Yeah, absolutely.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
60 minutes away from the first trading day of the trading week. 60 minutes away, and equity futures doing okay, up by 0.6% on the S&P. On the Nasdaq 100, up by 0.8. With 1 hour until the cash open, with your morning movers, here's Manus Cranny. Hey, Manus.
Jonathan, good morning. Dust off your 2018 playbook in terms of how U.S. steel and aluminum manufacturers perform. Cleveland Cliffs soared in 2018 by just under 8%. We're pretty much at that level. In 2018, imports of steel dropped by 11%. 8,700 jobs were created. Downstream, 75,000 jobs went. Roll it over, have a look at Meta. Day 16 of the upside for Meta. Can we extend that? This is about wearables. We're hearing the CTO, Andrew Bosworth, put out a memo. 6 new wearables coming along for Meta. Close it off with BP. Elliott had such a great performance last week when they yielded from Honeywell the extraction that they wanted. Today we understand that they have a sizable stake in BP, a significant holding. What are they going to push for? Because the buyback is under pressure, Jonathan, so let's see what they kind of extract from BP.
Aluminum. You're getting there, Manus. See, Manus?
Oh, boy.
Just used to saying aluminium.
What is
this? It takes a
this?
while to settle into it. Just sort of like let it bed in.
But just to be clear, he's leaning in. And
I lean in big time. I go back to the UK and say sidewalk, and they're like, who is this?
Seriously?
Oh, yeah, absolutely.
Do you do it with pride, or do you kind of like...
Sure, this is my home now, yeah.
Adidas?
Oh, that one's still tough.
I do Adidas.
The one I've shifted
Schedule.
on, because it never made...
It's
I was
worst.
never into that. That's
Thank
ridiculous. The one I've shifted on is Nike, because as a kid it was Nike, which makes
That's not
absolutely...
okay.
No, that's not okay, and I totally agree. And I'm ashamed that we did that as kids in the UK, that it was Nike and not Nike. Wasn't this a commercial last night in the Super Bowl? I'm sure it was, for a cruise, wasn't it? I'm sure it was.
With Nike?
Orlando Bloom was in it, for cruises.
I don't
You
remember
missed
that one. I missed that one. I watched all the other ones. I will say, is there any other grievance from your childhood that you feel embarrassed about, that you want to talk about, that you said?
Just
But
Nike.
aluminum,
That's
I
the
think,
limit of it.
I think it's worth saying aluminum
Yogurt.
just by virtue of the fact that it's more efficient, you know, like
It's
American.
quicker, smooth. Yeah, I'm with
America.
you. Let's get to Michael McKee, our Bloomberg economics and policy correspondent. I'm nodding, I'm agreeing with you. Mike, lots of data this week, a double dose of Chairman Powell as well. What are you looking forward to?
Well, obviously, Powell's going to be the highlight of the week. He testifies tomorrow before the Senate and on Wednesday before the House. But what can he really say? I mean, basically, he said it at his press conference that we don't know what the Trump administration is going to do, so we haven't been able to figure out what it means for the economy. It's going to be tough for him to have much of an impact tomorrow, although both sides, I'm sure, will try to get him to opine on the politics of it all. Then comes CPI on Wednesday, which normally would be a big thing, and we are expecting really no change in the CPI numbers from the month of December. But again, that falls under the what does Trump mean? We are in the last days of the Biden administration as far as data. All this stuff is January data, and Trump didn't take office till the very end. Jobless claims on Thursday isn't going to be very interesting this time, but it's something to watch going forward, guys, because with Elon Musk and Donald Trump laying off thousands of federal workers, we might start to see those jump a little bit, something to keep an eye on. We get some other Fed speak besides the chairman. We get on Tuesday, Beth Hammack, John Williams, and Mickey Bowman. Wednesday, Bostic and Waller, and Friday, Logan. And very few of those are speaking on the economy. Chris Waller is talking about the stable coins, which isn't going to give you much clue about where they're going from here. So I guess everybody at the Fed is sort of on hold, but they're doing these hearings anyway. And I might mention, we didn't have on the list there, Thursday PPI. We'll find out what aluminum prices are.
Nice, Mike.
For the past month.
Nice. Just wanted to follow up with you quickly, Mike, and not on that, just on UMich from Friday. UMich in the past has spooked Chairman Powell and this Federal Reserve when they were at the start of their hiking cycle. They shifted in size. We'll remember what happened when we got that UMich print. How much weight will they put on Friday's number?
That's going to scare them a little bit, but they're going to keep an eye on it probably because so much of that was based on headlines about what might happen. We didn't really get the tariffs, but people read a lot about it. So does it really mean they're going to continue to think inflation's going to get out of control, or does it start to fall back if the tariffs don't get imposed?
Michael McKee, appreciate it, sir. Big week ahead for the inflation story. CPI on Wednesday morning. Jonathan Pingle and the team at UBS writing the following. Uncertainty is high for January CPI. The range of possible outcomes and reasonable forecasts is considerably larger than in recent months. Jonathan joins us now for more. Jonathan, welcome back, sir. Let's pick up on your quote and start there. Why is that the case?
Well, January is a month where, you traditionally see a lot of price changes in pricing behavior. It's the start of the year, which is kind of understandable. Now, this is in sort of non-seasonally adjusted data, but it is the case that the vast majority of price increases that take place in the economy tend to come in the first quarter. So the information we're going to get, in this report on Wednesday, quite a wide range of uncertainty. Do we repeat what happened last year with the Q1 inflation scare? Are we making progress towards, lower inflation? Pretty wide range of potential outcomes, high degree of uncertainty, but it is, going back to what Lisa said, I think it is going to be the most impactful thing of the week.
To build on that, Jonathan, I think reinforcing that was the data we got on Friday, the UMich print. Consumer expectations for inflation picking up, and maybe that's the difference between now and the head fake of last year in the first quarter, that we have the additional threat of tariffs that at least for now appears to be weighing on consumers, at least those surveyed by UMich. How much weight do you put on that survey?
Well, I mean, it was the preliminary data, and we have seen this pattern where those numbers have revised down in the final release later in the month, so we will wait and see. But I do think it is important to watch those. And the 1 year ahead, particularly, I mean, it jumped. So, I think that is the key concern over the tariffs. I mean, a lot of the numbers we're talking about with the China tariffs that were put in place or what's been proposed on steel, I mean, they could add up, but you're not talking about really large changes in your inflation outlook. But, if this is going to become something that consumers start to expect and it feeds into, wage demands and how they're going to think about spending, it's worth watching because that obviously could be a much bigger impact on the economy.
Jonathan, one thing people have been struggling with is just where are we coming from? How much momentum has there been in the economy? We got a read on that from the non-farm payrolls report, as well as the revisions that weren't as significant as people expected. One thing that I keep noting is that consumer spending is holding up, but savings keep declining. What's your takeaway from that?
Well, I mean, there's still a lot of wealth sloshing around in the economy. I mean, you are seeing pockets of consumers that are under, certainly stress. We've seen sort of delinquency rates rise. But if you look at the top 20% of the income distribution they're just awash in cash, wealth, and liquid assets, giving them plenty of ability to continue to spend. And that's what, in the aggregate, is sort of making household balance sheets look so good. Now, I do think consumer spending is probably likely to cool. I mean, we have seen some slowing in nominal wage growth. There's been a big boost to real incomes from falling inflation. A lot of those benefits are sort of in the rearview mirror. But, but let's face it, consumer spending's been strong, momentum's been good, and I think it's really the brightest spot in the overall economy at the moment.
Jonathan, based on all of this, as well as the overhang of the potential tariffs that may be coming on in different variations, are you seeing a little chance that the Federal Reserve is going to cut rates this year? Is that basically your base case at this point?
No, I mean, I think, this goes back to how much information we're going to get on Wednesday, and Chair Powell's going to testify after the CPI for his take. But when we look at what we're expecting, I mean, we're expecting a 30 basis point increase in core inflation. We're a little above consensus on headline. But after we get the run of CPI, PPI, and import price data, when we look at the PCE deflator, which is the inflation that the Fed targets, I mean, the year-over-year rates should start moving down more obviously in the next few months. I mean, even with the inflation from the tariffs that we've put in our baseline, I mean, we think core inflation is going to be below 2.5%, by the time you get to this spring. I think, if we start to see dents in growth, I think that's going to motivate, at least some further normalization by the Fed. But I mean, obviously, if we're going to get universal tariffs or, a significant inflation shock that feeds through to expectations, it's going to be really tricky for the Fed.
Jonathan, it's been a muddle, and I think a lot of people are trying to figure out exactly what compass to use as they look through the muddle. One aspect that keeps coming up is the immigration component that might be more potentially impactful on the economy than even the tariff side of things. Is that how you see it as well?
Well, I mean, I think the way we look at it, I mean, the tariffs depend on where they go, how big they are, but the immigration will matter over time. I mean, we essentially took down our speed limit for the economy by roughly 0.5 percentage point because of what we expect to see in the slowing in international migration between the surge in 23 and what we expect it to look like in 2026. So that certainly matters. But I think from a consumer expectations point, what John was talking about, what you're talking about with the Michigan, I think is exactly right to be watching. And when we think about the potential for price impacts from something like a universal tariff, they could be quite large. And I think that in sort of my 12-month ahead worry is much more front and center than I think what the immigration impact is going to be.
Hey, Jonathan, appreciate it. It's good to hear from you. Jonathan Pingle there of UBS on the week ahead. Looking ahead to inflation data on Wednesday morning when we get CPI, Thursday PPI, Friday retail sales, Chairman Powell twice, once on Tuesday and again on Wednesday in front of the Senate and then on the House on Capitol Hill. The other focus for us, just like Jonathan Pingle, trade and tariffs. We're coming into this week. We were told by the president on Air Force One on the way to the Super Bowl Sunday afternoon that we would see tariffs on steel and aluminum. We were also told that maybe you'll get those reciprocal tariffs later this week. So here's a time just to keep an eye on. 1 p.m. Eastern time later on today, just learning that the president will be signing executive orders, which is often an opportunity now for the press to start asking some questions. So if we don't hear anything about trade, maybe we get some questions on it.
Right, so this is the probably earliest we're going to see him talk about the steel and aluminum, 25%. Potentially he'll be signing an executive order about it. It's interesting because the White House says it's closed press. It's closed press at the moment. What happens is usually it's closed press and the president decides, actually bring the press in. I want to talk to them about the executive orders I'm signing. So I'm sure at some point he will discuss with the press what he's going to be signing. And he said today is 25% when it comes to steel and aluminum.
He has signed executive orders in almost every single day he's been in office so far. Every single day. It has been a record-breaking pace. I saw that headline and I thought that could be an evergreen headline because every single day it's a new slew of executive orders. Which ones of them will stick? And that's one key question a lot of people have.
The last White House was a snoozy, sleepy White House for many, many reasons. This one is not. And there is an appointment to view almost every single day when it comes to policy.
Every single day he has signed at least one, if not many. How many of them are going to stay, though? We keep asking that question.
It's an aggressive administration when it comes to all the policies and all the executive orders they want to sign. What I would say is some of them really do matter. Like potentially if he signs an EO on steel and aluminum, that will matter. The president also said he's going to sign an executive order this week, maybe that's coming today, when it comes to banning paper straws. There are some executive orders that are just out there for politicking purposes. They don't really need to, as a market participant, to really take on board and care about.
Let's get back to the markets. Equities up by 0.6% on the S&P near session highs. Aaron Brown of PIMCO writing the following. Recent macro data and earnings reports indicate a U.S. economy that continues to outpace other developed markets. We maintain an equity overweight concentrated in the United States. Erin joins us now for more. Erin, welcome to the program. Let's start with that. And let's start more broadly as well with just some of the consensus positions coming into 25. We've upended a series of them. US versus Europe, for the dollar bulls, for the bond bears. There's been plenty to think about. Do you think they're just position squeezing or something else, something more?
I do. I mean, I think that, coming into this year, the markets were, broadly speaking, pretty long dollar, short bonds, and long equities, but long probably U.S. equities over the rest of the world. And really, none of those trades have panned out. Europe has outperformed the U.S. Bonds have basically gone nowhere, and similarly with the dollar. I think a lot of that is just a little bit of position squeezes going into what was, fairly crowded positioning in the beginning of the year. But when you step back, I see very little reason for the rest of the world to outperform the U.S., particularly under the Trump administration's policies that they're pursuing. But also, if you just look at growth dynamics and inflation dynamics across the world, the U.S. is clearly continuing to outpace and outperform the rest of the world, which, really would give way to the U.S. equity market outperforming the rest of the world as well. And, while certainly the Fed has paused relative to other central banks, what you're seeing now is probably more fiscal out of the U.S., which ultimately is what is going to drive the economy more so than central bank rate cuts at this point, at this point of where we are. So I think that the U.S. is still, front and center, the main outperformer within U.S. equity markets. And I think that U.S. domestics particularly are what's going to outperform this year.
So Mislav Matejka over at JP Morgan in Europe, Erin, made a similar point, that for this trade to work the way it has been working over the past few weeks, you need to close growth differentials, and there's no sign of that happening just yet, which takes us back to the US and your call. So let's sit on the US equity market and think about what's working, banks, what's not, certain parts of tech. What do you think will work in the year ahead, and why?
So I think staying as domestic as possible is going to work. So financials, I think, are going to continue to be an outperformer this year. Also, the power utility names, particularly those that are leveraged to the AI trade, I think those names still work. Clearly, they took a little bit of a breather in the beginning of the year and late last year, but I think that position is actually really attractive to re-enter right now. I also think that some U.S. cyclicals, consumer cyclicals, will work, but I really stay away from any cyclicals that have international exposure. Energy sector, I also think, is going to do quite well this year. What won't work? Industrials continue to forestall any type of CapEx investment. They've now pushed it out another 2 quarters to the end of this year. Business CapEx is underperforming relative to, or business sentiment rather is underperforming relative to consumer sentiment. And so I think that, what anything with international exposure that is going to be front and center with respect to tariffs is likely going to underperform. And some of the more deep cyclical materials, mining, industrial sectors are likely in that bucket, whereas the ones that are more leveraged to the consumer are likely the ones that are going to outperform this year.
Erin, there's a tension here. If the risk is actually an outperformance in the U.S. economy to people's relative expectations right now, then doesn't that challenge the idea of rates remaining where they are, going significantly lower on the long end, which is almost necessary for some of the more domestically focused smaller companies to do better?
Well, I wouldn't go so far down the line as investing in small caps. I'm not making a call that small caps are going to outperform relative to large caps. I still think large to mid caps are really where you want to invest. That said, rates are still restrictive, absolutely. They've come down, meaningfully since the third quarter of last year, but they're still in restrictive territory. We think that the Fed is likely not done with its rate cutting path in this cycle, so there still are more rate cuts to come, but they've probably been pushed out into the back half of the year and into 2026, and we're likely to see the Fed, take a little bit of a breather here and wait to see the impact of, first, the rate tariffs, the rate cuts that have already transpired, and second, the impact of tariffs and some of the other executive orders that you've mentioned. So I think that the Fed right now is in a wait-and-see mode, but they're not at the end of the rate-cutting cycle. There's still more to come. That said, in order for those small caps to really meaningfully outperform, I think you're right. I think we do need to see rates, significantly lower from here. We're likely not going to get that at least in the first half of this year, which means that the large and the mid caps will likely continue to outperform.
At the same time, the large and the mid caps tend to be most pressured by a strong dollar. I'm just thinking about all of these sort of America First stories and how they trickle out in the different asset classes and how it really rebounds back to corporate fundamentals. How much is that a headwind that's been priced in versus something that still is going to be felt through as we get earnings?
Well, with respect to FX, you're already seeing, fairly significant impacts on the FX side. Some of the consumer staples names, and we still have a number of staples names left to report, but they're seeing headwinds anywhere from 3 to 10% in terms of the FX hit. That's a sector that we're a little bit more cautious on right now because of it. If you see the impact of tariffs also, having a double, whammy in terms of the hits, that's also going to, hurt, I think, that sector, which is why I think, any sectors with significant international exposure are ones that you likely want to stay away from, or companies with significant international exposure are ones that you want to stay away from. That said, going back to the U.S., going back to the consumer, this U.S. consumer as a standalone is very strong right now. And if anything, what we're hearing out of some of the consumer companies coming out of the fourth quarter is that they saw strengthening into the fourth quarter, and at the end of the year, at sort of recent cyclical highs in terms of the consumer dynamics and behavior that they're seeing. So, I think ultimately fundamentals trump what you're seeing in some of the noise in Washington. And ultimately, investors are going to go back to fundamentals and go back to what's working. And I think that you've seen, several themes emerge in the last, 3 months or so that are likely going to continue into the rest of 2025.
Erin, appreciate it. Erin Brown there of PIMCO. Bit of a clinic there on Trump 101. And let's take a step back and think about what that 101 is. We've talked about it repeatedly over the last few months. If you export into America, life might become difficult. If you're invested in America, this administration, its objective is to make life as easy as it possibly can for you. Now, maybe you disagree with that. That's your judgment call. But ultimately, what you're hearing there from Erin, that's why she's getting long the domestically exposed big names on a stock market.
And it might be even better for you if Congress is able to enact a lower corporate tax rate based off the fact if you're able to produce domestically in the United States. What's also interesting, it's not just the tariffs and the walls that might be going up, it's also the retaliatory environment that we could see for these companies. Think about in Europe what happened to Harley Davidson and Levi's in 2018.
Let's give you an update on stories elsewhere. More on that still to come with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John. Other action from President Trump. He has directed the Treasury to stop making the penny, part of a broader effort to cut waste in the national budget. The U.S. Mint said in its 2024 annual report that it will cost 3.7 cents to produce and distribute a penny. That is up from more than 20% from the previous year. The higher costs are partially due to rising prices of metals like zinc and copper. Elsewhere, DeepSeek is hiring. The Chinese startup that stunned markets after announcing an AI model on par with OpenAI is recruiting specialists to expand its tech ambitions. The company advertised at least half a dozen jobs focused on AI. The role showed DeepSeek is trying to continue to be at the forefront of Chinese AI. Philadelphia will hold a parade this week to celebrate the Eagles' victory over the Kansas Chiefs in Super Bowl 59, but it remains to be seen if they will be invited to visit the White House. The team did not visit after their 2018 victory. Trump had called off the visit after criticizing players who kneeled during the national anthem in protest of racial injustice. And that's your brief. John.
Danny, thank you. Thanks for this morning. Up next, we'll set you up for the week ahead from New York. You're watching Bloomberg TV.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never
Ready? Go.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Equities on the S&P at session highs are up by 0.6%. The opening bell about 35 minutes away. Your trading week looks like this tomorrow. Fed Chair Jay Powell kicking off his two-day congressional testimony, starting in the Senate, then moving on to the House on Wednesday. January CPI that morning, 8:30 Eastern Time. Thursday, PPI and another round of jobless claims. On Friday, retail sales, plus the Munich Security Conference begins. The Vice President, J.D. Vance, heading towards that. Then, of course, long weekend, Bramo. Coming up, President's Day, next Monday.
You're already telling me about weekend. It's almost a weekend. And yes, I'm going skiing. I'm watching the auctions. Just want to say that.
Skiing this weekend?
Yeah, no, yeah.
Oh, good
like
for you.
with,
Cool.
with the kids,
Nice.
whole family. Yeah, well, before we've got some auctions, and I'll be very much watching them.
I think the auctions are interesting because the President of the United States last night said there could be a problem with treasuries. So, yeah, the auctions are a key point this week. I'm interested.
We'll put them on the week ahead, in size and which maturity, all of that. We'll do that tomorrow morning.
I think that's
all right?
good. Thank you.
No problem. Coming up tomorrow morning, Dan Morris of BNP Paribas, Stuart Kaiser of Citi, Sinead Colden Grant of BNY, and Sarah Malik of Nuveen. From New York City, thank you for choosing Bloomberg TV. Looking forward to covering the week with you. This was Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world, and so that has been very lucrative for us as a business.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good Monday morning. We see futures rising this morning, 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Shonali Bassett. Katie Greifeld is off today, and Bloomberg Open Interest starts right now.
Coming up, President Trump says tariffs are coming for aluminum and steel. The president plans to impose 25% levies on all imports of the metal. That news is boosting steel stocks. It's boosting the dollar. It's stoking gold, which is now at an all-time high, all ahead of inflation data and Chair Powell's testimony on Capitol Hill coming up this week. Meanwhile, on the corporate front, one of the world's most aggressive activist investor targets BP as McDonald's serves up strong international results. Let's take a look right now where markets are trading. We do see futures up across the board. In fact, right now, S&P futures trading at 60.86. That's where they closed on the day I left here for vacation 2.5 weeks ago. So nothing's changed in that sense. NASDAQ futures gaining almost 1 full percent, 21,788, as a number of hyperscalers have boosted their CapEx targets to build that internet infrastructure this year. And the 10-year yield, this is, Shonali, where you've pointed out, we have seen a little bit of a change over the last 2.5 weeks. We were at 460, now we're at 448, so down about 12 basis points in that span. Today, down 1.5 basis points. Check out gold. Dan Curtis, our producer in London, put together this chart. And he always does it in logs so that it's meaningless to most of us. But the point is, back in 1973, when the Treasury marked its gold holdings, 260 million ounces, I believe. It was trading for $42.22. And that's what the Treasury still values its gold holdings at. Today, we're at $28.99. We've been over $2,900, a record for gold prices. If they were to revalue those holdings, they could, through repurchase agreements, get another $750 billion from the Treasury, and then they would have to issue fewer bonds this year.
A lot of value in the things you could hold, not the financial industry instruments, but gold, steel. Let's take a look at what's moving under the hood. You mentioned those steel stocks were rising. Nucor among them, up more than 6% pre-market. There are others as well, but they're moving higher after those plans that Trump had announced for 25% tariffs on all imports of aluminum and steel into the United States. We're also looking at BP because activist investor Elliott, the most feared on Wall Street, they built a stake in the British energy giant. We're going to discuss it later this hour, but you can see that the market does like it. Up another 6%, almost 7% pre-market. McDonald's, sales in the U.S. were light, but internationally they were strong. The global sales growth was for the first time since the middle of last year. Sales, though they dropped in the U.S., they were offset by Japan, Middle Eastern markets. McDonald's now up almost 2% pre-market. Matt, we're in the middle of earnings season still.
Kind of smells like McDonald's. I feel like somebody may have brought a bag of McDonald's
Just
food
in your head.
in the studio. Let's talk about the spending that the hyperscalers plan to do, Shonali? Because while I was away a couple of weeks ago, there was a story out that DeepSeek could do the same thing that OpenAI does with ChatGPT or Google does with Gemini, but for a fraction of the price. And I thought, wow, that's a big deal. Over the last couple of days, we've seen the 4 biggest spenders on AI infrastructure boost their CapEx plans even more. So DeepSeek says, we can do this more efficiently, and American tech companies say, no, we can spend even more money.
Yeah, they sure did, and you have Amazon among the chiefs of them here, as you saw in that chart. What's fascinating to me is that you've seen this market melt higher still, even though NVIDIA is actually down on the year. So you're seeing the big tech companies really benefit with this competition in AI. Of course, over in Paris, there's a big conference going on right now. We're going to bring some details throughout it. But the big story still is what we're seeing on the tariff story, even with, and I just have to note, it's a big week of data ahead. I know this morning you were asking who's watching anymore. I think we have to.
Yeah, how much does CPI matter? How much does the Fed matter to this market? These are just questions I was posing because there was a time when that was the only thing that mattered, and it wasn't too long ago. But now tariffs obviously are front and center. Trump has suggested he'll put 25% levies on steel and aluminum from any exporter, or I guess importer from our point of view. Bloomberg Steel reporter Joe Doe joins us here on set, Joe, and I find this absolutely fascinating because we've seen this before. It's happened, and it was helpful for about a year, caused a spike in prices before they then collapsed again.
Yeah, exactly. 2018, the tariffs finally came in because they deliberated for about a year over it. And the steelmakers had a nice benefit through like June of 2018. And then after that, it was kind of moving back downwards. Here today, obviously, you see all the steel names are up. All the, the 2 aluminum names that are American domestic producers are up. I think the thing to remember, though, on the move is that these steelmakers have been absolutely battered. Last year was the worst year that the American steel industry has seen stock performance-wise since the first Trump administration. So there is a little bit of room to grow. I was talking to a couple of contacts last week. There was a big steel conference. Everybody was expecting Canada and Mexico steel tariffs. Then they didn't get them, and the mood had turned very dour at the conference. Now suddenly back on. I think long-term, it's yet to see what really happens here. I think one thing for everybody to remember is the bottom line what the steel industry cares about with the tariffs is capacity utilization. If capacity utilization is 80%, they say they're fine, our profits are good. It's not really about jobs.
Let's also look under the hood here. As you mentioned, a lot of the steel companies in the U.S. are rising this morning off of a low base, as you mentioned. Who stands to benefit most? What does the plumbing look like under the surface? If this were to happen, how does that benefit start seeping into these companies?
You're going to see Nucor Corporation, Steel Dynamics, U.S. Steel, and Cliffs all benefit in the near term. Prices are going to go up for them, obviously, because prices actually are going to go up for consumers. The service centers will probably benefit from this. Those are the middlemen who actually buy from the steel companies and then sell to the actual consumers. But beyond that, we're going to have to wait and see actually who does benefit. It is reasonable to think that costs are going to start going up.
But at the end of the day, it looks like a lifeline. This is what we were talking this morning for U.S. Steel. Really, Nucor and Steel Dynamics are going to make even more money because they don't use the coal blasting furnaces that U.S. Steel, the old school techniques, right?
Yeah, I mean, obviously Nucor and Steel Dynamics, mini mills, I mean, they're going to have a huge benefit. I do also think you will see a pretty decent benefit for Cliffs and for U.S. Steel, the blast furnaces, as you mentioned. And of course, U.S. Steel, this is probably good for them because the president effectively said, there's no way I'm allowing Nippon Steel to have a majority ownership in this company, which upset a lot of investors who are still looking for the $55 a share. So at least these tariffs coming in may give some reprieve. And listen, that's what Trump said he was going to do for U.S. Steel back in December. He said, why does anyone have to own U.S. Steel? We're going to give them beautiful tariffs, and that seems to be what he's doing today, at least.
All right, Joe, we'll continue to talk to you as this story develops. Joe Doe covers the steel industry for us at Bloomberg. Joining us now is Samir Samana, head of global equities and real assets for Wells Fargo Investment Institute. Samir, great to have you on the program. What do you think of this tariff news? You know, we've seen so many stops and starts on tariffs. I thought, you know, they would tank the market when we were looking at potential 25% tariffs on Mexican and Canadian goods, but the market seems to take it in stride. Really, it doesn't seem to push the S&P down too much.
Yeah, I mean, much of it comes down to sequencing. You know, what we've told investors is, look, focus on the direction of travel, which is, you know, net, you're going to see higher tariffs. At some point, they're going to lead to higher inflation prints. Maybe not the number later this week, but at some point, you're going to see higher inflation. As you mentioned, you know, you're going to see consumers pay more for a wide variety of goods. And then at some point, the Fed's going to either not cut at all or maybe even have to talk about, you know, raising interest rates. So, you know, I don't know how much time it's going to take to get from, you know, call it point A to point B from the standpoint of inflation becomes a real problem. But that's kind of what we're thinking. So, you know, how should investors, you know, kind of think about it? You're probably going to see rates go back up to recent highs. You've seen gold continue to kind of climb higher. The dollar's been climbing higher. We think all those things will continue to kind of drift upwards.
Samir, what does this mean for the CPI print expected on Wednesday? This is, of course, the first inflation print since the inauguration. But to your point, a lot of what you're talking about, this potential increase in consumer prices, you may not see until later down the road. Do you think the most recent, this upcoming PPI, CPI print will show any signs of stress?
It's probably a little too early. Now, that being said, I know a lot of, you know, probably producers were trying to run ahead of any potential tariffs. So, you know, growth was pretty good in Q4 and in January, and a lot of people kind of stocked up. So it's possible. But really, I think what I would focus on is those one-year kind of inflation swaps, which are threatening 52-week highs and even breaking out a little bit. I think that's where the real game is being played on inflation expectations. And then you saw, you know, last week, consumer inflation expectations are already, you know, starting to take higher. So I think that's what I would keep my eyes on.
You know, we're going to talk to our reporter Natalia Knijevic later on in the program about hedge funds upping their purchases of stocks at the fastest pace in 3 years. Consumers, retail investors also were going gangbusters buying stocks last week. And institutions, foreign investors, all fully invested. If you see room to run for the S&P 500, where's that marginal buyer coming from? Where's that marginal dollar coming from?
Sure. So we do see, you know, additional room for the S&P to run. Our target for year end is 6,600. A lot of it will come from corporates, right? You're about to exit kind of the buyback blackout window, and this was another really strong quarter of revenues and earnings, and I think Q1 will be even better than Q4. So I think a lot of it does come back to corporates, but then I think also just there's kind of an ongoing, you know, healthy labor market, so people keep getting, you know, more cash to invest as their paychecks come in. They probably save a certain amount of it, but you are right in terms of this market could probably use a breather. So to the extent that flows kind of wax and wane, you probably are in a period where other than corporations, probably everybody else is kind of in the pool.
What's the setup here? Because you do see a trade back into that large cap tech trade, but the Magnificent Seven has actually been choppy overall. If you look this year, they're actually still down on the year, even if you've seen the S&P rise. What's going to create leadership for the market in the next month or so?
Yeah, great question. So I think big picture, I think an upward chop just in general for the broader market is really kind of the playbook for this year. So you'll get these really nice rallies. You'll probably want to sell some of them. You'll probably get these really nice pullbacks. You're going to want to step in and buy. We do think large caps continue to outperform small caps in the U.S. And then we like anything but defensives. And what that means is we like energy. That's our most favorable. We like financials. We like industrials. And we like comm services, which has had a great run. But if you were to tell me, you know, hey, look, tech has lost leadership, what's taken its place? Probably the easiest, cleanest story to tell right now is probably financials. When you look at the level of interest rates, when you look at the fact that there's a little bit of steepness in the curve, I think that's probably where the leadership starts to evolve as we get into the later part of the year, when it might seem like, you know, maybe if inflation comes down to the Fed can cut, or the other one would be industrials. You know, we really do think that, you know, the U.S. manufacturing side is starting to improve. They're catching up to the consumer side, and that could be a really nice catch-up trade.
Samir, we thank you for joining us this Monday morning. That is Samir Samana of Wells Fargo Investment Institute. And coming up, we're going to head over to Paris. We're going to talk about the Paris AI Summit. We're going to hear from OpenAI's Chief Global Affairs Officer with our own Tom McKenzie. You're not going to want to miss it. Stick with us. This is Bloomberg.
Kickstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Let's get now to high interest, a look at what's reading on the terminal. President Trump is suggesting that Elon Musk's government efficiency team found irregularities while examining data at the U.S. Treasury Department. It wasn't immediately clear whether the president was talking about U.S. government debt, because he said treasuries, or payments processed through the Treasury Department, and he didn't elaborate on what problems Musk found. But we are waiting with bated breath to find out ourselves. Also, Google's AI chief is calling out DeepSeek for its claim of spending under $6 million to develop its artificial intelligence model. Demis Hassabis, who is the boss of Google DeepMind, also shot down the idea that DeepSeek's emergence upends the economics of AI development. He spoke to Bloomberg at the Paris AI Summit earlier.
First thing to say is it's a very impressive model, very impressive piece of work. I think the team is probably the best team that I've seen come out of China. So that said, I think a lot of the claims are exaggerated and a little bit misleading.
We're going to now head over to the AI Action Summit in Paris, where Bloomberg's Tom McKenzie is sitting down with OpenAI's Chief Global Affairs Officer, Chris Lehane.
Guys, thank you very much indeed. Yes, at Le Grand Palais in Paris. I'll start with that question about DeepSeek, because it is a key question for people attending this event. Chris Lehane, Head of Global Policy, of course, at OpenAI. DeepSeek, how do you characterize the impact of DeepSeek? We're just hearing from Demis Hassabis, who I sat down with earlier. He said their claims around the way they built and trained this model, the cost and the amount of chips they were using, he says that's exaggerated.
So I think there can be two things that are true here. One, that they have built a really impressive model. It basically competes with what OpenAI had put out back in September. Now we've since put out other more advanced models, but clearly a very capable model. I think the second thing what Demis said can also be true, which is perhaps, and we've seen news reports on this, that the costs, that how the technology was derived, that, whether they access certain types of chips, whether what was initially said was not actually the case. I do think the big takeaway, though, even if everything I just said turns out to be accurate and true, it is still a very impressive and competitive model. And so, to me, the big takeaway in all of this is that this really reaffirms something that OpenAI has been saying since the summer of 2024, that there are two countries in the world that can build AI at scale, the US, the CCP-led China. And what that really means is that there is a global competition right now between whether the world's going to be built on small d, democratic AI rails or authoritarian, autocratic AI rails, and that's the big takeaway from this.
I want to get to that, but I want to push you on what your team have discovered, because I know there's an investigation, there has been a probe within OpenAI as to whether or not DeepSeek inappropriately used some of the inferencing data, distilling from your own models. Have you come to a conclusion on that?
We're still looking at it. Obviously, we've already made public that we had seen some evidence of that taking place. And just so folks understand, because distillation is not a normal word, that, at least certainly that I don't use at the breakfast table all the time, there is different kinds of distillation. And I'll use an analogy. If you go to the library and you take out a book and you learn from that book and that ultimately informs some of your work, that's fine. That takes place all the time. That's part of what happens in the AI space. There's another version of it where you go to the library, take the book, keep the book, put your name on the book, slap a cover on the book, and hand it out as if it's your book. And that's the replication, and I think that's what we're concerned about. And again, what we've seen some evidence of and are continuing to review to have a better understanding. We've talked with government officials about it, and we'll share more as we learn more.
Yeah, of course. Well, OpenAI's critics have said, you guys trained your models on data and you haven't been fully transparent in terms of the use of that data. And I know you would push back.
That's right. There's good calories and bad calories. There's a good distillation and problematic distillation.
Have any of your customers pushed back and said, look, we're uncomfortable with the pricing of your models at this juncture?
Well, let me put it this way. OpenAI came out in November of 2 years ago, 2022, right? And within 2 months, was it 100 million users, right? We're well over 300 million today, continuing to see, that really strong growth. And what we try to do is have different models priced at different levels depending on how you ultimately want to use it. And it's something, just given the nature of how fast the technology is moving and the pace that it's moving at, that you're always constantly trying to evaluate.
You think prices go down from here?
So I think amongst the most interesting things that we have seen, this is an interesting aspect, which is the efficiencies of systems, particularly using the reasoning technology, is coming down. Sam Altman, our CEO, put a blog out last night, maybe technically this morning, I don't know, but some point in the last 24 hours, that sort of looked at 3 observations of AI. The first was that the more you spend on compute to build frontier models, it's pretty logarithmic, the more powerful those get. So you're going to require more and more compute, more and more investment in infrastructure. Secondly, that over the last year or so, we've seen a big increase in efficiencies, which are bringing down the cost of a token of that. Think of a token as a price of compute, as a unit of compute, about 150%. But even as the costs come down, the amount of people using it go up. So that then puts pressures back on compute. Like an analogy here is car prices come down, more people drive cars, but you then need more energy, more roads. Third piece that has come out in his observation, sorry, just bear with me for a second, is that the economic productivity that you're getting is super exponential.
Where are you getting the money to spend? 100 billion initially on Stargate. Elon Musk says you probably don't have the money. Even Satya Nadella says we're good for our 80 billion.
Yeah.
Where's your 100 billion?
So, first of all, we have incredible partners. We have SoftBank, which is a proven track record of raising enormous syndicated money from sovereigns and pensions
Up to 500
and
billion.
others.
How much of that is coming from OpenAI?
And then we have Oracle, right, which actually builds these. Then you have OpenAI. What our piece of this, first of all, in terms of the immediate question, there's 100 billion that's going to be going out the door in the immediate future. We already have a facility in Abilene. You guys need to come down. You can, Abilene, Texas, sorry.
Yeah.
We'd love to give you guys, you can hang out. The Oracle guys have done an awesome job down there.
You're dodging my credit.
No. I want you to come see it.
I'll come see it. How much are you putting?
We're not going to show. We
We
like to show, not tell.
Yeah.
And then the OpenAI piece comes in 2 different pieces here. And I think this is to understand the economic model here. First of all, what we bring to this is the IP. And you can think of compute the same way maybe you can think of gas. Regular gas, medium gas, and then premium gas. The premium gas is what people are going to pay for. The premium compute is going to be the most expensive compute in the world because it's going to be the highest level compute. You only get that premium compute with our IP. IP going into the chip design, IP going into the data centers, IP going how the clusters are sort of structured. And then we also are a buyer of of the compute, right? So we commit to buying a certain amount of the compute that's coming out, which helps the whole economic model work.
Chris, you worked in the Clinton White House. Is the Trump administration...
I have a lot more hair than
are they right? You've got a great hairline. Is the Trump administration right to slash AI regulation?
I think what the Trump administration is focused on is one thing, and one thing very clearly: who is going to prevail in the competition between Democratic AI and autocratic? That's what they get up and think about every day, at least from what I have seen and from what I have heard. And so I think they understand that you do have to really be leaning into the innovation. If you think about where the sort of comparative advantages are, right? At the end of the day, this is actually pretty simple. Whoever has access to compute is going to be in a strong position. What makes up compute? It's data, it's energy, it's chips, and it's talent. Right? And if you think of what the PRC has, they have an enormous amount of data, authoritarian state, energy, 10 nuclear facilities last year, another 10 coming on this year. Our chips are better. They're throwing a ton of money at it. Talent, and I think the talent piece is really interesting because they do have great talent in China, but in capitalist systems, it is capitalism that unleashes the developer, the builder, the entrepreneur, the people who are actually making this stuff into tools that solve hard problems, and that's where our advantage is.
Is that why you've joined up and partnered with Andrew? And I'm just thinking of the AI principles of Google. They've adjusted them, and Google is no longer ruling out building tech for defense, for the military. Yeah. You're signing up, you partner with Andrew. How far does that relationship go? How much are you prepared to embed tech into weapon systems?
Yeah, and we also just announced a partnership with the national labs, which are which play an incredibly important role in how the U.S. government thinks about national security issues.
But on defense.
Yeah, yes, and the labs, obviously like Los Alamos and others are very big players in the broader national security ecosystem. So, for us, right, we do want to be a partner on innovation with government. We do believe it's incredibly important that democratic AI prevails, and that means making sure that the government is getting access to the highest capabilities. We'll certainly do it consistent with our values and our principles, but at the end of the day, we do believe it is very consistent with a mission that is to make sure AI benefits everyone, that you're ensuring that AI is going to be built in a democratic way with democratic values.
Chris Lehane, thank you very much indeed. Global Head of Policy at OpenAI. Guys, back to you.
All right, thanks very much. Tom McKenzie there at the AI Summit in Paris. We are looking right now at a market that continues to rise. We're seeing steel stocks, particularly Nucor, Alcoa, U.S. Steel, all catch a gain on the suggestion of tariffs coming up. We're going to have coverage, by the way, continued coverage of that AI Summit throughout the day, so stay with us if you want to hear more about that. The AI spend also a huge part of this story. Eric Lombard, the French finance minister, do they have any money?
Enough to spend to go to the AI show. We're also going to speak to Marty Chavez of Sixth Street. He's going to talk about AI and investing. Remember, he used to be the former CFO of Goldman and Chief Technology Officer there. We're going to talk about how it's going to change finance next. But we are just ahead of the opening bell. Stick with us. Futures on the rise. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards.
so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, you know, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
New up-to-the-minute global financial news whenever and wherever it happens. I'm Jonathan Ferro.
And I'm Lisa Abramowitz in Davos, Switzerland, and this is Bloomberg.
We are moments away from the start of trading on this Monday morning. This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on futures. They're up on the threat of tariffs. What a world we live in. S&P futures gaining 0.5% here, back to exactly the level that they were when I left 2 weeks ago this office. The NASDAQ futures up even more, 0.8%. The small caps splitting the difference. In terms of the opening bell, you can see on the New York Stock Exchange, American Healthcare is a REIT that went public last year. They're up more than double since they started trading, about 144% the gain. On the NASDAQ, you have NovoCure, which is an oncology company looking for a cure for cancer. I looked at their stock over the last 5 years, down 75%. So I hope they do find the cure for cancer, because they're not making anybody rich right now. In terms of the major averages, right now you can see the S&P, the NASDAQ, and the Russell trading just about where futures indicated. So 6,056. It seems like we have so much news. There's so much going on in terms of the Department of Government Efficiency, tariff announcements, firing federal workers, and yet the market stays exactly where it was. Stocks to watch, the steel tariffs really pushing U.S. producers higher, as you would expect. U.S. steel maybe needed a little bit of a lifeline, although the stock has been doing very well over the last few years. But 38.30 is where it's trading right now, still far off from the $55 offer from Nippon that looks like it's never going to happen, but never say never is what I'm really learning in this administration. Cleveland Cliffs up 10%, 11%, so big gain for them and a gain for Alcoa as well on the potential lift in prices that manufacturers are going to have to pay them for their products.
Yes, certainly interesting to watch. You have it even more on the rise now. Cleveland Cliffs up more than 12%. Also, potential deal activity, nothing to say of that even just for today, but certainly moves from the White House. They like it. We're looking at some other things too. We're looking at Lyft under the surface too, up more than 5.5%. It plans to launch robo-taxis as early as 2026, according to one report. They will launch in Dallas and be powered by Mobileye, which of course is on the rise as well, up more than 13%. Also want to take a look at ON Semiconductor because the forecast missed analyst estimates. The CEO is citing uncertainty for 2025. Quarterly revenue dropped 15% year over year, but full year free cash flow tripled in 2024, yet you're seeing it down more than 4.5% as the market opens. Matt, we are still in earnings season.
Yeah, that's so exciting, earnings season, but not nearly. Look, the Fed and earnings, do they matter as much as these tariff announcements?
They matter. When you can't trust anything, you stick to the facts, you stick to the numbers.
Back to the basics. Okay, let's bring in New Edge Wealth Chief Investment Officer Cameron Dawson. She joins us here at the desk. And Cam, it's great to have you today because you actually in your previous life were an industrials analyst. So we have this news on the potential of tariffs, and when I saw the announcement, I instantly thought of 2018 when the exact same thing happened. It's like deja vu which was awesome for U.S. steel for a little bit. Until it wasn't, right?
And it certainly caused huge disruptions throughout supply chains. When we thought about overall industrial production, it actually caused it to fall and contract. PMIs went negative as we got into 2019. So these tariffs, even when they were very focused back in 2018 and 2019, very different than the broad tariffs that are being discussed today, we saw them very much weigh on industrial sentiment and activity on the stocks in 2018. They did better in 2019 as they anticipated a bottom, but I think it's important to remember that these tariffs do come at a cost because of the uncertainty.
Speaking of the uncertainty, you had just a couple of weeks ago, were you here when he threatened the Canada and Mexico tariffs?
No, but I was watching, my jaw was on the floor waiting for us to tariff our two biggest trading partners.
Right.
Didn't happen.
It was a negotiation. One question we've been having is, what is the impact? When you have the threat, you do have some movement under the surface. You have some companies moving around supply chains in order to prepare for what may or may not happen. How do you prepare?
That's the hope that they're moving around supply chains. Are they actually doing it?
You do see it in some of the port activity, for example. You see people kind of front-running some of the things that might happen. So how do you take account for what is actually happening versus what might happen?
Well, we haven't necessarily seen a big influx or that hoped for manufacturing renaissance. So they might be pulling forward activity. Doesn't necessarily mean that they're significantly changing where supply chains are located. And we would ask the question of...
Is inventory?
Well, yes. And if you haven't changed your sourcing locations after the first round of tariffs in the trade war, after the pandemic, after the closing of the Chinese economy for multiple years, what more do you really have to move in the ability to shift around? So we do think that if you do apply something like a universal tariff or those reciprocal tariffs that are being thrown out, that there's a lot of things you can't change production of simply because you don't produce them in the U.S.
Right.
About fish and avocados and bananas.
I always think about cars, right? Because, well, first of all, I care about cars, but I think Stellantis produces 40% or builds 40% of its vehicles in Canada and Mexico. GM more than 30%, Ford 25%. Even with the threat of tariffs, they weren't like, okay, we'll shut down our plants in Ontario and move them back to Michigan or Indiana or Kentucky, wherever they are. So, but the bottom line is these things drive up prices, right? For example, when steel prices go up 25%, those companies that need to bend metal are going to have to charge consumers 25% more. And there was a CBS poll. Did you see this yesterday? 52% of Americans approve of the job Donald Trump has done in his first 4 weeks in office, but 66% are worried about inflation. We're getting CPI. Shanali's going to pay close attention. The Fed obviously cares. Does it matter?
It certainly matters. The administration's been talking about two ways that tariffs aren't inflationary. The first one is that consumer preferences will react, meaning if you raise prices in one place, they'll be able to find spending in another. The other one is through the currency channel. But all of these things take time. They're not immediate reactions. And you saw it in the University of Michigan data that showed up on Friday that showed this big, huge jump in inflation expectations. And the Fed is concerned about that. Go back to the summer of 2022. In 2022, the Fed did its jumbo hike. And the reason it did its jumbo hike is because consumer inflation expectations popped in that UMich survey. So they are concerned that if you do see rising prices, that inflation expectations could become unanchored. And that's something that the Fed really doesn't want to see. And it does speak to just the psychological component of inflation as well, of how some of these things can become self-fulfilling prophecies.
We sit next to each other, Shanali and I, even offset. And she was saying, CPI, there's data coming out. And I was like, does it matter? It doesn't feel like the Fed matters to this market as much as it did
But is it even just about the Fed? If you have inflation expectations rising, that's a self-fulfilling prophecy, isn't it?
Well, I do think that the Fed is more of a reaction to what's happening within markets and the economy versus a driver of what's going on in markets and economy, which is very different than the last few years where the Fed very much was the key source of kind of volatility within markets. We think that's because policy is a bigger impact because of where we are in this cutting cycle. We think the Fed is effectively on hold, that the labor market is giving them no reason to change where policy is today, which just means that they're taking a back seat to these other headlines.
Well, to the other headlines, it's earnings season.
Knew it. Knew it.
It matters. It matters for a different reason, and this is I'm going to build a case for you.
Yeah.
If you have inflation potentially rising, or at least inflation expectations, you're in an earnings season where DataTrack pointed out this morning you're doing better than the 10-year average, but not as good as the 5-year average in terms of how much you're seeing beats in terms of companies that have reported earnings so far.
It's always
and the margin of beats.
75%.
Yeah. So if you have inflation, then at what point do we start worrying about margins again? People seem to be very happy with all the CapEx spend and any other types of spending, but when does that end if you're starting to see prices rise?
Well, maybe you're starting to see a little bit of evidence in it in the 25 and 2026 numbers. They've been revised lower by about 1 to 2% each one over the past couple of weeks as we've moved through earnings season.
So in aggregate, are we still expecting like 14% earnings growth for this year?
Still expecting that mid-teens earnings growth. However, it's just slightly lower than it was when we started this earnings season, which means that even though fourth quarter numbers are coming in much better than expected, you went into the earnings season expecting 12%, you're getting 16% growth. That's great news, but what you're seeing is analysts start to cut those out-year numbers, and that's super important to watch because that rising 12-month forward earnings estimate has been the key underpinning driver of this rally for the last 2 years.
So are you bullish this market, Cameron? I mean, we were talking with Samir Samana earlier from Wells Fargo. He expects gains in the S&P 500, even though everybody's fully invested and has already piled in, right? He says corporate buybacks are going to drive it higher.
Our estimate is, or expectation is for a wide choppy range. We're calling it the talking heads market, that the market's on the road to nowhere. And this idea that you have to grow into these high valuations, you have to grow into stretch positioning. It means that the best you get is earnings growth because you're starting at such high elevated valuations and there's not nearly as much money on the sidelines. Look at individual household allocations to equities. They're at all-time highs in the Fed data. They're at nearly 20-year highs in the AAII data. There's just less room for people to be drawn into this market.
And institutional allocation and foreign investors.
Exactly.
I mean, they're all...
How exciting is a market when gold is the top trade?
I love the gold. Did you see the gold story in the Financial Times? Jillian Tett wrote a piece that said, maybe Treasury is going to mark to market its gold holdings, which it currently marks at $42 an ounce.
This was a half an hour of my morning. Cameron, thank you so much for joining us today. Of course, it does set up for an interesting market. That is New Edge Wealth Chief Investment Officer Cameron Dawson. Now, coming up, people overseas are loving it. International sales boost McDonald's this quarter. We're going to bring you more on those results next. This is Bloomberg.
People, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
The countdown is on. Everything you need to Get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's time now for our top call. Some of the analyst action in focus for us this morning. First up is Kraft Heinz, no longer a buy at Mizuho. It's getting downgraded to a neutral after the analyst says the shares are weakening thanks to softer store volumes. Next up, TD Cowen says Merck is no longer a buy. The firm says it doesn't see viable arguments for the drug maker's outperformance. It also cited reduced growth prospects. And finally, Bank America upgrading Mobileye, saying it's no longer a sell. The firm cites positive catalysts this year thanks to contract wins with several automakers. Meanwhile, as Shanali was saying earlier, Lyft announcing it will launch robo-taxis not until next year, but it's going to do it starting in Dallas with Mobileye technology. Shanali?
And we're looking at McDonald's. The stock is higher after international business drove sales numbers higher. U.S. sales, though, slipped in the quarter as the fast food giant contended with an E. coli outbreak. Joining us now with more insight, Michael Halen, senior restaurant analyst for Bloomberg Intelligence. You look at the numbers, you look at their plan to spend more. How do you feel about what's being put on the table here? Is the weakness in U.S. sales something to look at in the year ahead, even if the international sales are rebounding?
Yeah, so the focus of the quarter really was the recovery post-E. coli, and so we got pretty good news there. December traffic was positive, which I think was much better than most had expected. You know, they talked about a little bit of a bumpy January, but they expect a full recovery in U.S. same-store sales by the beginning of the second quarter, and you know, the street is taking that as very good news.
I got to ask about you know, the quality of the food that they're serving up, Michael, when we have Bernie Sanders agreeing with RFK Jr., you know, that America faces a real problem. The food that we grow and serve, sell to our people is poisoning us. Is McDonald's changing, you know, the menu to make people healthier? I know they always kind of feign that, but is there any chance they actually do that?
Well, you know, I think the fast food chains are giving people what they want, right? They want convenience at a strong price, and a lot of Americans, to your point, do not necessarily are not looking for much healthier food. You know, who knows what we'll see if RFK gets nominated, and if there'll be some changes in regulations around the food that restaurants are served, you know, but a lot of that onus will also fall on the food manufacturers, right? I mean, McDonald's is not vertically integrated, and so, you know, they may be working on reformulations of some of their items now as we speak in preparation, but we don't expect a huge impact to their business.
Can we just talk a little bit more about price here as well? Because you saw that $5 meal really take off. You saw others really instated as well. You saw them also offer different promotions like, you know, Canadian dollar, $1 Canadian dollar coffee, $4 for Euro Happy Meal, of course, over abroad in France as well. How long do these promotions continue? At what point do they become a more permanent staple for consumers that are still looking really for a deal?
Yeah, well, listen, you know, the quick service industry is heavily exposed to low-income consumers, right? And low-income consumers are most impacted by all the inflation that we've seen for the last 4+ years, right? And so for that reason, you'll continue to see quick service lean pretty heavily, you know, on value, right? And McDonald's especially pushed pretty hard in the third quarter on value, and it improve their traffic, right? And so it's working to help turn around that business. You know, next, you know, on their agenda is going to be, once same-store sales are fully recovered from E. coli, is to start with new product news and amplify those new launches with more marketing, right? And so snack wraps, chicken strips, you know, continued LTOs of the Chicken Big Mac, all that stuff is going to be pushed out later this year to help drive, you know, better same-store sales, and you know, they'll be spending on marketing to amplify that. But it's going to be a barbell strategy, right? Value is going to constantly be a big part of McDonald's and QSR strategy, because about 30% of their consumers are low income.
Janelle, have you seen Baraka?
No.
You know, the 1990s art house film that showed factory farming chicken farms?
Is this another movie you're going to make
It's terrifying. It's terrifying to see. I mean, when
I'm
you
gonna take your
mentioned
word for
the
it.
Chicken Big Mac, Michael Halen, and I shudder to think how those chickens are raised. When Shonali said price, I thought she was talking about the stock. It's trading at over $300 a share, but it's really underperformed the S&P over the last 5 years, over the last 1 year. And we were talking with an analyst this morning who said the marginal buyer is going to be the company itself, right? Are we going to see more stock buybacks? Does McDonald's have capacity to give more money back to investors?
They do. They're under-levered compared to some of their restaurant peers, and you know, being so heavily franchised, yeah, they have plenty of capital to deploy in stock buybacks. So yeah, the answer is yes there. You know, I would just say, just in general, it's harder to get excited about QSR this year than fast casual, and then even casual dining. And the big reason why is what I mentioned earlier, is that pretty significant exposure to the low-income consumer, right? In terms of asset prices, a lot of them are at all-time highs: gold, S&P, home prices, all that stuff. And so upper middle and higher income consumers are feeling pretty good and spending more, right? So the chains like McDonald's that have high exposure to low-income consumers, and also international chains that have a lot of exposure to Europe, who's getting hit even harder with inflation and seeing even a larger slowdown by low-income consumers, right? I think we'll probably underperform this year.
All right, Michael, thanks very much. Michael Halen there at Bloomberg Intelligence talking to us about McDonald's. You're looking at these, you're looking at the NASDAQ. You're chomping at the bit to give us some market check.
Ripping.
Yeah.
Well, you have your biggest gainer is actually Trade Desk, which is really interesting after a Super Bowl day. Of course, people thinking about advertising, people thinking about streaming. But NVIDIA is also up quite meaningfully today. You have the main supplier of AI servers saying that sales were strong. They strengthened their first quarter outlook. You're seeing NVIDIA rise in synchrony. You're off of session highs for that NASDAQ 100, but you're up almost 1%. So looking pretty good. But gains across the board there. S&P 500, Russell 2000 also up, Matt. Coming up, though, we're going to look at one particular stock. We're going to look at BP. It's jumping after Paul Singer's Elliott takes a significant holding. We're going to take a look at the implications next in the Wall Street Beat. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
It's time now for the Wall Street Beat. BP shares are surging after Paul Singer, one of the world's most aggressive activist investors, built a stake in the company through Elliott Management. Here with more, Bloomberg's Will Kennedy. BP has been struggling with years of underperformance, really. What is it that Elliott wants them to do that has investors excited at the moment?
Well, we don't know exactly what he wants them to do, but one of the criticisms of BP's strategy has been that the strategy set by the previous CEO, Bernard Looney, to really reorientate the company towards the energy transition, to pare back oil and gas production, to invest in new energies, has backfired. And a lot of investors don't like that strategy. The share price, as you say, has underperformed. And I think the expectation is that this activist will push BP further along that path. It already started to go back to its traditional business, but really concentrate on oil and gas and perhaps lose some of those new investments and just refocus on its core.
Yeah, I'm looking at the shares. Will, I always pull up a comp chart. I feel like the 5-year default is just a great timeline. BP is down almost 7%. Meanwhile, Exxon is up 82%. And that's not even, including buybacks. What are they doing wrong? Why is Exxon doing so much better?
No, it's a pretty stark contrast, as you say, and it also holds true to a slightly less extreme extent to Shell, which is the other big UK major to which it's often compared. I mean, it started going all the way back to 2010 when they had the Gulf of Mexico oil spill disaster, and there have been a series of missteps since. It had to write down a huge investment in Russia after the invasion of Ukraine. It then lost Bernard Looney as CEO. He had perhaps lent too far into the energy transition on the back of falling demand during the pandemic, and you put all these things together, and it's a pretty sorry tale. That said, there are a lot of fine businesses still in BP. It is a world-class oil and gas company. It's very good at trading oil and gas. It has an enviable position in the Gulf of Mexico. And so it's likely that that's why Elliott sees the value there, that it wants to unlock the good parts of the business and get past some of the strategic missteps.
All right, Will, thanks so much for joining us. Great to get a little bit of time with you. Bloomberg's Will Kennedy has been covering these businesses for years, dare I say decades.
Yeah, it's been a tough start for the new CEO as well, but we know Elliott wants fast change.
Yeah, that's right. Octoclass needs to get with it if he's going to satisfy Paul Singer. Coming up in the next hour, Marty Chavez joins us from 6th Street on his AI bets, then Anna Paglia from State Street on ETFs.
Had been offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
CBS News on the Hour, sponsored by Progressive Insurance. I'm Peter King. The president's latest announced tariffs may have some of the U.S.'s biggest trading partners wondering why. White House correspondent Nancy Cordes.
Another day, another tariff, it seems. President Trump saying that he's going to impose 25% tariffs on all foreign steel and aluminum imports starting today. Now, that will have the biggest impact on close allies like Canada and Mexico, whose leaders just cut deals with the president last week that they may have thought would head off moves like this.
China has responded to Trump-imposed tariffs with its own on U.S. goods. CBS News business analyst Jill Schlesinger.
The Chinese government has retaliated with levies of up to 10 to 15% of $14 billion worth of U.S. goods. Those goods include things that we export, like liquefied natural gas, coal, and crude oil, farm equipment, and some automotive goods.
The president has promised to end the Ukraine war now.
National Security Advisor Mike Waltz says members of the Trump administration will meet with European officials about ending the war in Ukraine that's nearly 3 years old. President Trump says the war would not have started under his watch.
I'd like to see that war end for one primary reason: they're killing so many people.
The president said yesterday while on Air Force One he has spoken to Russian President Vladimir Putin about the war. Wendy Gillette, CBS News.
Philadelphia Eagles fans are relishing their Super Bowl victory. Music fans are talking about the halftime show.
It's your uncle, Sam. Samuel L. Jackson bringing Kendrick Lamar to the Super Bowl stage, launching into a medley of his hits, including Squabble Up and Luther. With frequent collaborator SZA, that audio courtesy of Fox Sports, but it was that will he or won't he moment that brought the house down. Going into his now infamous Drake diss track, Not Like Us, which is at the center of a defamation suit being brought on by Drake. Matt Wolf, CBS News.
Another wave of snow is moving east. Meteorologist Nikki Nolan is on the CBS Weather Watch.
Over 23 million are currently under the threat of this winter storm from the plains to the mid-Atlantic. Snow accumulations upwards of 4 to 9 inches are expected, with ice accumulations upwards of 1/4 of an inch.
The CDC says flu cases are spiking again. Doctor visits for the flu at their highest level in 16 years. CBS's Dr. John LaPook says if you feel sick, don't ignore it.
It's important to make that diagnosis because if you make the diagnosis and you can get medication, Tamiflu or Xofluza, works best if diagnosed within the first 48 hours. So you got to stay in touch with your healthcare provider.
In early trading, the Dow is up 149. This is CBS News. Who says print is dead? CBS's Linda Kenyon has the hard copy on a magazine's return.
5 years after stepping away from print, Playboy makes a comeback. Lori Harvey is on the cover. The model, fashion and beauty entrepreneur, and actress is the daughter of Marjorie Harvey and comedian Steve Harvey. The issue also features an interview with Golden Globes host Nikki Glaser, in case you get the magazine, just for the articles.
Another icon of the 60s and 70s is the subject of a new documentary. Sylvester Stewart, better known as Sly Stone, as in Sly and the Family Stone. The film by Questlove streams later this week on Hulu. A Sydney, Australia man was surprised to find 6 snakes in a pile of mulch in his backyard. He called a trapper who found more than 100 poisonous red-bellied snakes, 5 adults, 97 offspring, now headed to a national park. I'm Peter King, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Happy congratulations Super Bowl if you are an Eagles fan.
Happy congratulations?
Yeah, why not?
Okay.
I watched the whole thing. I understood it, and now I'm super into football, and I know everything about it.
And your take on the
This is
game?
my equivalent of Landman, a la Paul Sweeney. My take is that the Eagles were awesome, and the Chiefs didn't come to the Super Bowl. That they stayed home.
Pretty good.
Yeah, thank you. Thank you very much.
Good defense from the Eagles. Past his prime at this point?
Yeah, I guess. I don't know. That, I don't feel like I know enough
Do you think
to call.
Taylor still,
Likes
embraces
him now? I do, because I think deep inside, she's still good. Okay. Anywho, I digress. Happy Monday. I'm Alex Steele, alongside John Tucker. Paul Sweeney is off today. Norma Linda joining us for the next 2 hours. And we have a lot lined up for you. We're going to break down all the Super Bowl stuff, whether you're looking at gaming and lodging with Brian Eggers of Bloomberg Intelligence. We'll talk about the really weird commercials with Mark Douglas, President and CEO of Mountain. We will also talk about earnings with McDonald's, with Michael Halen of Bloomberg Intelligence. And James Abate is Managing Director and Chief Investment Officer at Center Asset Management. We'll kind of zoom out for a broader look on what to do with these markets. But let's kick it all off with a Bloomberg Business Flash. For that, we go to John Tucker.
And happy Monday. After Friday's sell-off this morning, major averages pushing higher right now, making up for some of those losses, if not all of them. I just want to pass this headline on to you. Merck in talks to buy SpringWorks Therapeutics. This according to Reuters. SpringWorks Therapeutics, those shares right now, they are surging. They are up 30%. President Trump preparing 25% tariffs on steel and aluminum imports into the U.S. As a result, you have shares of Alcoa. They're on the move right now, based in Pittsburgh, of course, up 3.2%. And then you have U.S. Steel shares. They are up close to 3% at this point. And you mentioned McDonald's reporting sales rising in the fourth quarter. This was growth mostly in the international business, making up for the decline in U.S. sales. Well, has the Trump trade kind of fizzled? We put that question to Lori Calvasina at RBC Capital Markets.
Pre-election, everything was frozen. We were supposed to see this big unleashing of activity. Companies aren't talking about that. They're not seeing it. It's been replaced by this cloud of uncertainty. How long it can go on, I'm not quite sure.
Right now, 8 of the 11 major industry groups in the S&P 500 are higher, being led by information technology. S&P 500, 37 points higher. That's a rise of 0.6%. We're at 6,063. The Dow Jones Industrial Average up 168 points. That is a rise of about 0.4%. The NASDAQ 100, after Friday's sell-off, that is up right now 1.2%, up 253 points. 2-year yield down 3 basis points. That's at 425. The 10-year yield 2 basis points lower at 446. Oh, yeah, and President Trump says he's going to order the end of pennies. Let's stop making them.
I mean, to be fair, they do cost more than they actually are. It's more just like a vanity thing.
They're made up, it's not a little copper, zinc, I think.
It still costs like more than an actual penny.
I'm not a fan of pennies.
Also, like, you know,
I pinch them.
Although if you put them in a big jar and then you take it to a bank and you can, like, you're surprised at how many pennies you have lying around your house.
This is true.
Just saying. All right, JT, thanks a lot. I'm Alex Steele alongside Norma Linda. First of all, happy congratulations, because that's what I'm going to start saying for the rest of the 2 hours. She was born in Philly, so you're very excited.
Fly, Eagles, fly.
Okay.
We won.
You won?
We won.
Are you a big sports person? She's not.
I'm not a big sports person, but, you know, I grew up wearing all of the Philadelphia Eagles gear. Yeah. Like, so many photos of me are in the little outfits, and so I had my grandma actually send me some T-shirts in the mail just so they could get here in time for the Super Bowl event I went to last night.
And, of course, she's going to bring them all to us tomorrow
so
to
you guys
celebrate.
Can see.
Yeah, all right. Good stuff. Looking forward to having you for the next couple hours. Let's get more stocks on the move here with Isabel Lee, Bloomberg Cross Asset Reporter. Isabel, you were looking at the aluminum, steel stocks. They're all outperforming this morning, yeah?
Yes, shares are surging, and that comes after, of course, President Trump plans, or at least announced plans to impose 25% tariffs on all imports of metals into the U.S. So this includes major suppliers like Mexico and Canada. So some highlights: Alcoa, it climbed 3%, Century Aluminum, 14%, or aluminium, as some people say. Steel firms are also higher, Cleveland-Cliffs, U.S. Steel. So Trump also said he would announce reciprocal tariffs this week on countries that tax U.S. imports, and this would be enacted almost immediately. That's what he said. But of course, we know that he's threatened a series of tariffs as of late, and he's rescinded some, he's paused, he's delayed, so we really don't know. But the U.S. relies on aluminum imports from a lot of countries to meet the vast majority of demand. So this is kind of big news.
Right, lots to dig into there, but what are you keeping an eye on in terms of the corporate side?
McDonald's.
Okay.
I know a lot of people love McDonald's. So sales rose in the fourth quarter, but get this, it's after the growth of its international business that made up for the decline of the sales in the U.S. So global same-store sales climbed, and in the U.S., though, they were a weak spot, so they saw a steeper decline than analysts were expecting. So guest counts grew, but their average ticket price declined. So I guess more people were going, but they were buying less stuff. Maybe like instead of 5 chicken nuggets, just 3 pieces.
And it's interesting because people say that when you travel, you should always check out different McDonald's across the world because they have different menus.
Whoever says that?
Everyone.
If you go to McDonald's, like in China, they have taro pie, at least last I went. In the Philippines, they have peach mango pie.
No,
when I was in Amsterdam, they had, stroopwafel?
No. Go to the place that has the stroopwafel. Go to the place that actually has the real. That's weird. You guys are weird. All right, let's wrap it up with maybe that's what the kids do. I don't know. I disagree wholeheartedly on this.
TikTokers.
Okay, let's go to Hyatt as well. This could be an M&A situation, yeah?
Yes, but for now, shares are flat, and that comes after Hyatt struck a deal to purchase Playa Hotels for $2.6 billion, and it expands their all-inclusive resort market, which has been growing, actually. It used to be like a boomer thing, but now they say even Gen Z likes it. Gen Z, because then if you go everything's there, food, everything, and you just pay one time. Anyway, Hyatt will pay $13.50 per share. Hyatt already owns almost 10% of Playa's outstanding shares. We have a Baird analyst, though, saying that the deal raised questions about why Hyatt would pay $2.6 billion to buy real estate, when we know investors are really rewarding companies that have asset-light strategies. So
that's
remains to be
interesting.
seen.
Yeah.
Maybe they're seeing something we're not.
All right, and also if you go all-inclusive, then you can't go to McDonald's, so...
Gotta weigh your priorities
I see
here.
this stressor here, all right? Isabel, thanks a lot. Isabel Lee, Bloomberg Cross Asset Reporter. So again, happy congratulations for all you Eagles fans. If you're a Chief fan, I'm real sorry. I really don't know what happened there to you, because now I saw the Super Bowl, so I'm obviously now a sports expert. Joining us now is Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst. So super fun for me. Understood the game, which let me tell you, it's taken a really long time to do that. But I can imagine this kind of blowout isn't great for sports betting.
Yeah, it's a lopsided victory, maybe not the one that fans or that sportsbooks expected. So I look at it a few different ways. On the one hand, the outcome was good for sportsbooks because those long-dated future bets on the Chiefs winning again did not pay off for bettors, and because the prop bets, some arcane ones, Saquon Barkley or others, Travis Kelce scoring touchdowns or massive rushing yards, that didn't really happen either. So in that sense, it was good for sports books. The bad thing was, because it was such a blowout game, all the bets on the over, the point spread exceeding a certain amount, or I should say the point total, those actually did pay off. So because it was such a high-scoring game, not as good for the books.
So when we think about sports betting and what it's looked like previous years versus this year in particular, of course, we know the Chiefs have won recently, so people were kind of expecting, you know, there could be a potential win there. But what are we seeing in terms of the flow when we think about sports betting this year in comparison to past years?
Well, it's up in a couple ways. It's up because simply there are more sports books, and this is a particularly expected to be a particularly close game with a 1.5 point spread. It actually was not close, as we all know. And we've got mobile betting in 33 states. Our call before this game was that although it's going to be strong, the growth might not be as pronounced as last year because we only have 2 new mobile betting states this year versus maybe 6 or 7 last year.
How do most Americans do sports gambling now, to your point with the mobile gambling?
It's very popular to do so on one's mobile phone. So mobile betting, I mean, across the industry, across the year, if states have both mobile betting and brick and mortar sports books, 85% of the action is on your phone, on the mobile betting. So Americans are participating in different ways, casual betting, betting with friends, but certainly mobile sports betting has become a dominant form of wagering.
How much betting and gambling did Americans do on Sunday that were based in New Orleans?
Yeah, so we've seen, we have seen, and we've estimates of our own somewhere between $1.2, $1.5 billion. It was a pretty big number. You know, the results are still kind of coming in, but overall, it was likely a very strong game. And I will say that, you know, from a outcome perspective, it's generally the reason the sportsbook's such at the tough fourth quarter was so many of the favorites won. Well, here, the underdog won. That on balance is generally favorable for sportsbooks, but, you know, we'll see how it plays out because some of the outcomes were mixed.
Did you guys see any data in particular in terms of lodging and what that looked like in New Orleans this year?
So our presumption was that it would be strong. I think the general call on the physical location of the game was that not as favorable for Las Vegas because last year the game was in Vegas and that drove a lot of lodging and resort activity. This year probably more favorable for New Orleans, but of course we went into this with a lot of trepidation because we did have that New Year's Eve terror attack, and that may have dampened some of the enthusiasm. Although I say watching last night, it seemed to be a very engaged and large crowd.
Okay, so do we have a winner call from yesterday, or like in your universe, like what's your favorite stock right now?
So I think overall, you know, the DraftKings and FanDuel's of the world have basically dominated this market. I think there's also room for other operators like BetMGM and Caesars. But when you look at the market, the bulk of betting is on DraftKings and FanDuel. Now, that being said, FanDuel's been dominant. DraftKings has kind of picked away at some of that market share. But there's certainly room in this very large industry for both. And I think overall, again, from last night's perspective, the big prop bets not paying off, the over-under bets, you know, it's kind of like overall it worked out okay for the books.
All right, Brian, thanks a lot. Really appreciate it. Brian Egger, Bloomberg Intelligence, Senior Gaming and Lodging Analyst. Okay, so happy congratulations again for all you Eagles fans. This is a really big day,
Can't
really
forget.
big moment. Nope, don't want to forget that. Want to keep giving that props out while we have it.
Thank you.
There's also, a market that we have to pay attention to now where you have earnings coming in that are not that exciting for this week, right? Because we're kind of waiting for retail that's going to pick up, and then we're going to wait for NVIDIA. What are you working on, Nora?
I'm always keeping an eye on real estate. So, of course, REITs, but also home builders. So right now I'm thinking about what potential immigration policies, how that could affect the home building industry when we think about construction, and what that could mean in terms of the broader industry, and whether or not we're able to see them to continue growing through this time period, or whether or not they will present to be an additional challenge on the labor front.
Industry?
Yeah. How many workers?
Yeah, I mean,
you're always building things, right?
Yeah, but
He doesn't count.
and yeah, I'm just wondering for immigrant labor, illegal immigrant labor, just how big of a force that is. We know what it is in the farming industry; it's huge.
There's definitely a lot, especially in the South. That's what I've been hearing from sources. So it's definitely something that we're going to have to see in terms of the fact that there's not a lot of data to show transparently what that looks like in terms of undocumented workers.
Totally, because you're probably not going to advertise that you have them and then put them through
100%.
The Department of Labor. All right, much more coming up. James Abate will be joining us for his take on the market.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Stocks are higher after Friday's sell-off, and it looks like technology in the lead right now, rebounding after that slide over tariff fears. You have right now NVIDIA extending a 5-day surge to about 15%. Meta Platforms also rising for a 16th consecutive day. You have material producers in the spotlight. This comes, of course, after President Trump's plans to impose 25% tariffs on all imports of U.S. steel and aluminum. As a result, shares of U.S. steel, right now, they're up close to 5%. And then you have Alcoa, which is based in Pittsburgh. Those shares right now, 3.6% higher. Overall, the S&P 500 up 37 points, up 0.6% at 6,063. Dow Jones Industrial Average up 112 points. That is a rise of 0.25%. And then the NASDAQ 100, that's the leader right now, up 272 points, up 1.3%. Two-year yield is down about 4 basis points, 4.25. The 10-year is about 3 basis points lower. That is at 4.46. Just talking about this, Goldman Sachs says the White House immigration crackdown is going to put a dent in the economy. Worker shortages could disrupt the labor market. They say net immigration, they see it plummeting to about 750,000 a year, possibly shaving almost a half point off economic growth in the United States because of that. So there you go. Some firm numbers, Nora.
Right. We have to see what would actually winds up panning out, or does it wind up tightening the labor market also? Does that wind up pushing up wages? And then does that kind of change the game for the Fed, too, if I cycle that out?
How does it all trickle out? We'll have to see.
No one has an answer here at this table?
If only, if only.
I'm just basking in your brilliance.
Oh, wow. The mocking.
You and me both.
that I just